welcome you all for the marathon revision of ECIPL. What is ECIPL? Economic, Commercial and Intellectual Property Laws. So, as I said, we will be doing the revisions with the help of the question bank as well as the revision notes. Revision notes has around 165 pages. So, 165 pages means 60 pages, not 60 pages, 70 pages, not 70, 50, 55, 60 pages per day. So we can aram se cover all the chapters in 3 days. Done. And 3 chapters are omitted. I hope you guys know those 3 chapters. One is Benami Transactions Prohibition Act. Next one is Fugitive Economic Offenders Act. And one more is ECBs, External Commercial Borrowings. Done. Okay, let's start with the lesson number 1. What is the lesson number 1? Foreign Exchange Management Act. Which year? 1999. So this chapter is all about the foreign exchange. Wherever there is an involvement of foreign currency, which comes into picture, Foreign Exchange Management Act. In that, the first topic is what? Definitions. So in this material, green color indicates the topic. Clear? And the red color indicates what? Subtopics. In the question bank, green color indicates the topic, a blue color indicates the what? Subtopics. Then the red color indicates the questions which were asked in the previous examinations. And the next color indicates what? The expected questions. So if you want to skip, you can skip this one, not this one. Are you guys getting it? So you'll get an idea, so which questions are important and which questions might come in the examinations. So let's start with chapter number 1. What is chapter number 1? I want everyone to involve in the class. When I ask questions, we should answer. Done? It's going to be a two-way communications. Clear? Can we start? Are you guys ready? Have some energy, guys. Are you guys ready? So let's start. Let's start with a few definitions. What is the first definitions? Foreign exchange. What exchange? Obviously, we're discussing that chapter called as Foreign Exchange Management Act. You must know what is a foreign exchange. What is a foreign exchange? Means a foreign currency. What currency? So foreign exchange means what currency? Foreign currency. It also includes deposits, credits, and the balances, which are payable in what currency? Foreign currency. I repeat, what is foreign exchange? Foreign currency. It also includes what? Deposits, balances, and credits, which are payable in what currency? Foreign currency. And one more, drafts, that is demand drafts, traveler checks, bills of exchange, which are letter of credit, which are expressed in what currency? Indian currency, but payable in what currency? Foreign currency. Means there is the involvement of two currencies here. One is Indian currency, other one is what currency? Foreign currency. It can be dollars, it can be euros, it can be anything. Clear? And the last one, it also includes drafts, traveler checks, letter of credits, or bills of exchange drawn by the banks or institution or a person resident where? Outside India, but payable where? Are in the Indian currency. What currency? That is called as what exchange? Foreign exchange. This is the important definition. Why? Because the name of the chapter is what? Foreign exchange. And if someone asks what is foreign exchange, you should be in a position to answer it. Correct, right? So tell me, what is foreign exchange? Foreign currency and includes deposits, credits, balances, which are payable in foreign currency. Next one is about instruments. That is this drafts, traveler checks, bills of exchange, letter of credit, which is expressed in which currency? Indian currency. Payable in what currency? Then it is otherwise now. Second, the last one is what? Drafts, traveler checks, bills of exchange, letter of credit, which is drawn by the institutions or the banks which are a person outside India but payable in, that is called as what exchange? Foreign exchange. So based on this topic, what type of question might come in the examinations? The first question, what is the first topic? Foreign exchange and foreign securities. The type of question might come in the examination, or the question which was asked based on this topic was distinguish between foreign exchange and foreign security. If they ask this question, you should write the definition of foreign exchange and foreign security. What security? So we have already discussed what? Foreign exchange. What exchange? Repeat, what is foreign exchange, everybody? It means foreign currency, includes deposits, balances, or credits which are payable in foreign currency. Third one, drafts, traveler checks, letter of credits, bills of exchange, expressed in Indian currency, payable in foreign currency. And the last one, drafts, traveler checks, letter of credits, bills of exchange drawn by the banks or the institutions or a person resident outside India but payable in what currency? Indian currency. Then comes foreign security. What security? What do you mean by foreign security? Nothing but shares, stocks, bonds, debentures, which are denominated, are expressed in what currency? Foreign currency, but where the interest or dividend is payable in which currency? Indian currency. What currency? Then it is called as what security? Foreign security. Where the securities are denominated or expressed in the foreign currency, but they are payable in which currencies? Indian currencies. Or where the interest or the dividend is payable in Indian currency, that is what called as what? Foreign securities. What securities? So we discussed the first definition. What is the first definition? Foreign exchange. And based on that topic, what question come in the examination? Difference between foreign exchange and foreign security. And we discussed the meaning of both foreign exchange as well as foreign securities. Are we clear with this? Next one. What is the next one? Person resident in India. Most important topic based on which there can be a practical question in the examinations. Who is a person resident in India? What in India? Important definitions for various provisions. A person is considered as resident in India if he has stayed for more than how many days? 182 days. In the current year or the previous financial year? Which financial year? If a person, if he has stayed in India for more than 182 days in the preceding financial year, then he is called as what? Resident in India. What in India? But there are exceptions. There are few cases where even if a person has stayed in India for more than 182 days, but still he is considered as, not considered as person resident in India. What are those three exceptions? If he is leaving India for what purpose? Employment purpose. Second one, business or occasions. Third one, where he has an intention to stay outside India for what period? Uncertain period. In these three cases, even if he has stayed for more than 182 days in the preceding financial year, still he is not considered as what? Person resident in India. Clear with this? And there is one more situation where if a person is staying in India for more than 182 days, still he is not considered as what? Person resident in India. What are those cases? If he is a foreign citizen. What citizen? If anyone comes to India, if anyone comes to what? Is he considered as resident in India? No. Even if he stays for more than how many days? 182 days. But there are three exceptions. How many exceptions? Then he will be considered as what? Resident in India. What are the three exceptions? If he comes to India for what purpose? Employment purpose. Second one, business or occasions. Third one, if he has an intention to stay in India for what period? Uncertain period. Then he is considered as what? Resident in India. Even if he has stayed for less than 182 days. Are we clear with this? Yes or no? What is the first one? Who is considered as resident in India? Any person who has stayed in India for more than how many days? In which financial year? Preceding financial year. But does not include, does not what? A person who has gone out of India or who stays outside India for taking up what? Employment outside India or for carrying on business or vacations. Or the third one, any other purpose in circumstances as with indication indicates its intention to stay outside India for what period? Uncertain period. It also does not include any person who has comes to India or stays in India in either of the case. Otherwise, then for how many purposes? But if a person comes to India for these three purposes, is he considered resident in India? Yes. Clear with this? Next comes to the body corporate or the companies. Any company or a body corporate incorporated in India is considered as what? Resident in India. What in India? And next one is any office or a branch or an agency which is owned or controlled by a person resident but established where? In India. That is considered as what? Person resident in India. Clear? Any offices or the branch or the agencies, even if it is established outside India, but it is controlled by who? Indian person. Then it is called as what? Person resident in India. The last one, any office or a branch or agency outside India. Where? Let's say there is a branch in Dubai, but it is controlled by the person who is what? Resident in India. What in India? Then it is called as what? Person resident in India. So there are four provisions. How many provisions? First one is for individuals, second one is for body corporates, third one is for office, agencies and the branches, and last one is also for office, branches and agencies. Are we clear with this? How many days? More than 182 days. Based on this, there can be what question? Practical question. What question? Before that, there are few more definitions based on which they asked questions in the previous examination. What is the one more question? Person. Definition of what? That I have not included in the revision notes. Why? Because it's a common definition. Is there even in the income tax as well? So who is a person? Person includes what? Individual, HUF, company, firm, association of persons or body of individuals or any agency, office or a branch owned or controlled by such person. This is the definition of what? Person. And this question was asked in which examination? 2013 December examinations for 5 marks. Definition of what? Person. Definition of what? Next one is authorized person. Most important definition. Who is an authorized person? See, a person can deal with foreign exchange only through an authorized person. Which person? So if you want to deal in a foreign exchange, you can only deal with what person? Authorized person. Now, who is an authorized person, sir? Who authorized person means a person who is authorized by the RBI. It includes an authorized dealer. What dealer? Especially all the banks, the major commercial banks are notified as what? Authorized dealer. What dealer? If I want to receive any foreign exchange, I should receive through whom? Authorized dealer. What dealer? So authorized person includes an authorized dealer, money changer. What changer? Have you seen money changers? In Orion Mall, there is a money changer, right? You exchanges your foreign exchange. If you want to convert your foreign currency into Indian currency, you can exchange with that. Ah, so he's also called as what person? Authorized person. Next one, offshore banking unit. Means if the Indian bank establishes their branches outside India, that is also called as what? Authorized person. What person? Next one, any other persons authorized by the RBI to deal with what exchange? Foreign exchange. What exchange? Only these persons are called as what? Authorized person. What person? And as per section 3 of the FEMA, you can deal with foreign exchange only through what person? Authorized person. What person? Now, what if I have some foreign currency? Let's say I have a dollars. I'm an individual, I have a dollars. You are a foreign traveler. You want to exchange your foreign currency into Indian currency. Can you exchange that with me? Allowed or not allowed? As per which section number? 3. Which act? FEMA. Because you can only deal with foreign exchange through which person? Authorized person. Everybody, what person? Are you guys clear with the definition of authorized persons? Yes or no? Tell me what the topic we discussed till now. What is the first topic? FEMA. Definition of foreign exchange. Second one, foreign securities. Third one, person resident of India. Fourth one, person. Fifth one, authorized person. Out of all these, remember the definition of authorized person. Who is an authorized person? Everyone, repeat. Means authorized dealer, money changer, offshore banking unit, any other person authorized by the RBI. Now we discuss the definition of person resident in India. What in India? I want everyone to read the question and answer. Let's read. Let's read. Ravi, an Indian citizen, works as a software engineer for an international company during the previous financial year 23-24. Ravi resided in India for how many days? Is it more than 182 days? Yes. So we're in which financial year now? 24? No, we are in which year? 25, 26. What is the current financial year? 25, 26. Correct, right? However, in April of the current financial year, means 24, 25, he accepted a job offer in Canada and left India with a long-term work visa. Is he called as resident of India in the year 24, 25? Is he a resident of India? 23, 24, he has stayed for how many days? 200 days. Last financial year, he has stayed for 200 days. But this financial year, he is leaving India. For what purpose? What purpose? Employment purpose. Is he called as resident of India or non-resident in India? Non-resident in India. The definition as per income tax is different. Definition as per FEMA is different. What is the definition of resident in India? Any person who has stayed for minimum how many days? 182 days is called as what? Resident in India. But there is an exception. If a person leaves India for employment purpose or business purpose or for an uncertain period, even if he has stayed for more than how many days? 182 days. Still he is not considered as what? Resident in India. If he is going for some other purpose, he is called a resident in India. Are we clear with this? Yes or no? Analyze the residential status of whom? Ravi. Is he a resident of India or not in the financial year 24-25? No, he's not a resident of India. Next question. Examine whether the following branches can be considered as personal resident in India. ABC Limited. What limited? A body corporate. The second provision. A body corporate incorporated in India. The moment it is incorporated in India, it is considered as what? Personal resident in India. Establish a branch at London. Now the question is this branch at London, is it called as resident in India or non-resident in India? Resident or non-resident? Resident. Because it company is what? Indian company. Resident in India. It established branch where? It means that branch is controlled by whom? Person resident in India. So even the branch is considered as what? Resident in India. What in India? Are we clear with this? Next one. XYZ, a foreign company. What company? Established a branch at where? New Delhi. On 1st January 2024, 2021, the branch at New Delhi controls the branch at what? Colombo. Now the question is, there is a branch which is established by a foreign company in New Delhi. Is this New Delhi branch considered as resident in India? Is this New Delhi branch resident in India? Yes. Anything and everything in India is considered as what? Resident in India. Irrespective of whether it is controlled from foreign, it doesn't matter. Now this branch in India is controlling a branch in where? Colombo. Branch in where? Is this branch in India is resident in India? And the branch in Colombo is also what now? Resident in India. Got the clarity? Yes or no? Now you guys tell me what is resident of India? Person who is resident of India. Definition of person of resident in India. Any person who has stayed for minimum or more than how many days? In which financial year? Does it include any person who is leaving India for employment purpose? Does it include any person who is going for employment or vacations? Sorry, business or vacations? No. Or for a what period? Uncertain period. Does it include any person who comes to in India or stays in India? Does it include any person who comes to India, stays in India? No. But there are exceptions. How many exceptions? If a person comes to India for what purpose? Is a resident of India. Business purpose? Uncertain period? Tell me a company incorporated in India. Resident in India. Office or branch in India. Office or branch outside India but controlled from India. Office or a branch outside India but controlled by the foreign residents. Non-resident in India. Are we clear with this? Yes or no? And how to present the answer if they ask this kind of questions in the examination, you have to write as per the as per what? A person resident in India means what? Any person residing in where? India for more than how many days, sir? And the same provisions right in the examination. Are we clear with this? Yes or no? Next topic. Next topic. So are we clear with the definition of foreign exchange? Foreign resident in India. Next one is what? Regulation and management of foreign exchange. Important regulation and management of what exchange? Section number what? 3. Section number 3 provides that no person. What person? And what do you mean by person? Individual, HUF, partnership firms, body corporate, association of persons. All these are called as what? Person. No person shall deal in or transfer any what exchange or foreign security other than through what person? Authorized person. What person? Now you guys tell me who is authorized person? Authorized dealer, money changer, offshore banking unit, and the last one, any other person notified by RBI. So you can only deal with foreign exchange through what person? Authorized person. You can transfer the foreign security or the foreign exchange to what person? Authorized person. If you do it other than through an authorized person, is it punishable offense? Yes. Second one, can you make a payment to a person who is outside India other than through an authorized person? No. So make any payment or for the credit of any person resident where? In what manner? Any manner. Next one, receive otherwise through what person? What person? Authorized person. What exchange? Foreign exchange. So you can only receive the foreign exchange only through what person? Authorized persons, or any payment by order on behalf of any person resident where? Outside India. Next one, enter into what transaction? In India, as a consideration for or an association with the acquisition or creation or transfer of right to acquire any asset where? Outside India. Where? Outside India. For example, let's say you want to buy a property outside India. Somebody will make a payment outside India on behalf of you. And for that, you will do something in India. You are in USA. Because you are paying money on behalf of me in the USA, I will do something on behalf of you in India. Is it allowed or not allowed? Not allowed. Because it is considered as what? Indirect dealing in foreign exchange. So you can deal with foreign exchange only through what person? And what person? Tell me, can you transfer security other than through authorized persons? No. Can you sell foreign exchange to other than authorized persons? Can you make payment to a person who is resident outside India other than through an authorized person? Can you receive foreign exchange other than through an authorized persons? No. All these things are what? Prohibited. What? Section number क्या है? 3. Section number. Are we clear with this? Regulation of what exchange? Regulation of what exchange? Foreign exchange. Repeat. What is the first definition? What we discussed till now. What is the first one? Foreign exchange. Second one, foreign security. Third one, person resident in India. Fourth one, person. Fifth one, sixth one, regulation of foreign exchange. Regulation of by the time I finish this chapter, you should be in a position to answer all my questions. That is the conditions. Are you guys clear with this? Yes or no? And next one, current account transaction. What transaction? Important current account transaction. What transaction? So the transactions which happens with respect to the foreign exchange can be classified into two categories. One is what transaction? Current account transaction. Second one is what transaction? Capital account transactions. There can be questions in the examination based on what transaction? Current account transaction. Definition is simple, say simple. It says what is current account transaction other than capital account transaction. I repeat, what is current account transaction? Other than what transaction? Capital account transaction. And it also includes the following types of transaction. What is the first one? Any payment made in the what course of business? Ordinary course of business. What course of business? You buy goods from abroad and you make payment. It is what transaction? You buy goods abroad from USA and you make payment. It is what transaction? Current account, capital account. You buy machinery from USA. No, it is current account transactions. It's a business. See, definition of asset is different from the accounting concept. And which concepts are? The FEMA concept. Simple, say simple. Keep this in mind. Any transaction which alters the asset or liability of a person in India. I repeat, if a transaction alters the asset or liability of a person resident India, where outside India, then it is called as what? Capital account transaction. If I purchase the goods on cash basis, what basis? Will it create any asset for me? A liability for me? If I buy machinery, if I buy what? From person who is in USA, and once I make payment, will there be any asset or liability outside India for me? It is done, it is a cash transaction. What transaction? What if I buy the machinery on credit basis? What basis? That is what transaction? I want answers. What transaction? Why it is capital account transaction? Because it is creating some what? Liability for me. Where? Outside India. Keep this in mind. Any transaction which creates an asset or liability for me, where? Then it is called as what transaction? Other than that, rest everything is what transaction? Current account transactions. What transaction? I buy machinery outside India. What transaction? Very below what transaction? Asset means it's a building. I purchase a building in London. What transaction? What transaction? Why it is capital account transaction? Because there is an asset created where? In London, outside India. What if I purchase or import machinery from outside India? What transaction? If I sell goods, purchase goods. I purchase a villa in abroad. What transaction? I borrow loan from a person who is outside India. What transaction? Why it is capital account transaction? Creating what? Liability. Keep this in mind. Simple say simple. Don't think too much. What is current account transaction? Any transaction other than is called as what transaction? And what is capital account transaction? Any transaction which alters an asset or liability for a person resident in India. Where? Outside India. Including contingent liability. What liability? But it is one for the person who is outside India. If it creates any asset or liability for him, where? That is called as what transaction? Capital account transaction. What transaction? Other than that, rest everything is what transaction? Current account transaction. I buy goods from abroad. What transaction? On cash basis, credit basis, short term credit, current account transaction. Only if it is long term credit is considered as what transaction? Capital account transaction. What transaction? I go to abroad on a tourist visa. What transaction? If I am going to USA for trip, a travel, what transaction? Current account transaction. Or I go to abroad and I buy some clothes, jewelries. What transaction? What transaction? I buy a flat over there. A person of USA comes to India, buy a flat in India. What transaction? Capital account transactions. For him, it is a capital account transaction because an asset is created where? In India. Are we clear with this? So, what is current account transaction means? Any transaction other than and includes the what? Following types of transaction. What is the first one? Payment in the what course of trade? Other services such as short-term bank credit. What credit? Short-term bank credit or credit facilities in the course of what? Business. Payment in the form of interest on loan. What on loan? Loan is capital account transaction, but payment of interest on loan is what transaction? Current account transactions. Or income from what? Investment. Dividend received. What transaction? Current account transaction. What transaction? Interest received on loan. Loan. What transaction? Capital account transaction. Are we clear with this? Next one. Remittances for living expenses. What expenses? Of whom? Parents, spouses, children living where? Abroad. What transaction? Expenses in connection with the foreign travel, education. What transaction? Why it is current account transaction? Simple logic. It is not creating any asset or liability for a person resident in India where? Outside India. Simple say simple logic. Are you guys clear with current account transaction now? I want everyone to repeat. What is current account transaction? Any transaction other than and includes any payment made in the what course of business? Ordinary course of business. Includes what term credit? Short term credit. And also what facilities? Credit facilities. What facilities? Does it includes any remittances, any interest on loan and interest from income from investment? Yes. Third one, living expenses of parents, spouse, children, living abroad, and foreign travel and education. All these are called as what transaction? Current account transaction. Now let's say I am Indian, resident in India. What if I purchase a flat in USA? What transaction? Resident of USA purchase flat in India. What transaction? I import machinery from USA. What transaction? I import machinery for a 6 months credit. On a 6 months credit, it depends. If it is more than 6 months or more than 8 months, it will consider as what? Capital account. Long term is capital account. Short term is current account. What if it is a long term credit? What transaction? Are you guys clear with how to classify current account transactions and capital account transactions? Clear with this? Next one. Schedule 1. There are 3 schedules under the current account transaction. Schedule 1, Schedule 2, Schedule 3. Schedule 1 provides the prohibited current account transaction. Means a person cannot undertake the following types of what transactions? Current account transactions. They are prohibited. Second one, there are few transactions which requires approval of central government. And there are Schedule 3 which provides the list of transactions which requires whose approval? RBI's approval. Whose approval? 3 lists are most important. Based on that, there can be a practical question in the examinations. Repeat, what is the first schedule? First schedule, prohibited. Second one, permission of who? Third one, permission of who? RBI. Let's start. First one, prohibited current account transactions. What transaction? If you are a person resident in India, you're not supposed to undertake or you're not supposed to draw foreign exchange for what purpose? Following purposes. There are how many transactions? 8 transactions. How many transactions? What is the first one? If you want to remit any money out of what winnings? You have won some money by lottery and you want to remit it outside India. Can you do that? Allowed or prohibited? Because as per which schedule? Schedule 1. Any remittances. What is remittances? Payments. What is remittances? Out of what winnings? Regular what winnings? Allowed or prohibited? Under which schedule? Of what transaction? What transaction? What is the first one? Remittances out of what winnings? Lottery winnings. Second one, remittances from income. From what? Race, horse racing, riding, and also any hobbies. If you have earned any money by racing or horse riding or the hobbies, can you remit that money? No. Is it prohibited? As per which schedule? Of which act? Which act? Which year? Which schedule? Of which act? FEMA. Of which transactions? Current account transaction. What is the first one? Remittance out of lottery buildings. Second one, remittance out of horse race, trading, or any other hobbies. Third one is also important. If you want to remit any money for the purchase of what? Lottery tickets, banned magazines. What magazines? Let's say there is some abusive magazines or nudity, like some sexually explicit magazines which are available outside India and you want to purchase it. Can you make payment for that purposes? Allowed or not allowed? Why do you want to waste our Indian currency, foreign exchange for such a nonsense things? Allowed or not allowed? Not allowed. Yes or no? Is it for what purpose? Good purpose. First one. Out of what winnings? Lottery winnings. Second one. Income from what? Horse race, hobbies, and trading. Third one, remittance for the purchase of lottery tickets, banned or prescribed magazines, football pools, sweepstakes, etc. Next one, fourth one, payment of commission. Payment of what? Let's listen. I will explain the concept. Listen. I want to invest in a foreign company. What company? If I purchase shares of foreign company, am I supposed to pay money? Yes or no? But what I will do, I will make an agreement with them saying that, bhai, I will not make cash payment. What I will do, I will export my goods to you. I'm going to buy a shares worth of 5 lakh rupees. How much? And for that 5 lakh rupees, I will not pay cash. What I will do, I will export the goods worth of how much? How much? And to negotiate this, there will be an agent. There will be what? To facilitate this export from India to the foreign company, there will be an agent. To that agent, can I pay commission? Can I pay commission? No, that is prohibited. That is what? Did you get the scenario here? What is the scenario? Indian person making investment in which company? Which company? Everybody, what company? Am I paying cash or goods? And that export, am I supposed to pay commission to the agent? Allowed or not allowed? Not allowed. Ordinary cases you can pay the commissions, but in this case, because you are making the export towards an equity investment, what investment? Can you pay commission to an agent? No, it is prohibited. What is the fourth transaction? Payment of commission. Bolo? On the what? Exports made towards what? Equity investment. What investment? In a joint ventures or wholly owned subsidiaries abroad of which companies? Below what companies? Indian company. Allowed or not allowed? I am making investment in a joint venture or a fully owned subsidiary, and for that investment, I'm exporting the goods. On that export, can I pay commission? Can I pay or not? Not allowed. As per which schedule? Which act? Under what transactions? Fourth one. Clear? What is the first one? Fast. What is the first one? Remittance out of lottery winning. Second one, horse race, riding, other hobbies. Third one, remittances for the purchase of lottery tickets, band magazines, football stakes, and sweepstakes. And the fourth one, payment of commissions on the exports made towards an equity investment in a joint venture or a fully owned subsidiary. Of which companies? Indian companies. Next one, remittance of dividends. Remittance of what? What do you mean by remittance of dividend? Payment of dividend. Payment of what? By which company? Well, which company? Indian company. To which the requirement of dividend balancing. What balancing? Dividend balancing is applicable. Now, what is this dividend balancing, sir? Where if the approval is given by the government to make an investment to a foreign company or to an investors from outside India with a condition that the outflow of dividend, outflow of what? Should be set off with the what? Exports made by Indian company. For example, let's say I'm an Indian company, Reliance company. There is a foreigner who has done the investment in Indian company. If he has done the investment, am I supposed to pay dividend to him? If I pay dividend, what will involve here? Foreign exchange. What exchange? But it was agreed that I will not draw foreign exchange for this. Instead, what I will do? I will export the goods on the foreign exchange, and with that money, what I will pay? Dividend. I repeat, there is a foreigner who has done the investment worth of, let's say, some amount of money. I'm supposed to pay him the dividend, supposed to pay him the what? But as per the law, for this type of investment, what is applicable? Dividend balancing. What balancing? Means I have to balance my outflow with what flow? Inflow. Means I should earn the foreign exchange to meet my obligation of payment of what? Dividend. Payment of what? Payment of what? In that situation, can you draw foreign exchange? No. For example, from which my company, what is applicable? Dividend balancing is applicable. What is applicable? If dividend balancing is applicable, and if I want to pay dividend, can I draw foreign exchange? Can I draw foreign exchange? Allowed or not allowed? Not allowed. Then how can I pay dividend? I should earn the foreign exchange by doing export. Yes or no? Understood? That is the which transaction? Fifth transaction. What transaction? Fifth transaction. Next one, sixth one. Payment of commission. Payment of what? And what? Exports. Under what? Rupee State Credit Route. RSCR route. What route? RSCR route. Expect commission up to how much? 10% of the invoice value of exports of tea and tobacco. Tea and water. So if there is any export made through under which scheme? Rupee State Credit Route. Bolo? On that, can you pay commission? No. I repeat, any export made to the rupee state credit route, you cannot pay commissions except for what? Tobacco and tea. Up to how much? 10%. Can you pay more than 10%? No. This is the one more transaction which is prohibited. Last one, not last one, seventh one. What is the seventh one? Payment for what services? Callback services. What services? Allowed or not allowed? Not allowed. And the last one, eighth one, remittance of interest income. What income? What income? On a funds held in which account? Non-resident special rupee scheme account. If you have a funds in an account called as what? Resident, non-resident special rupee account. On that account, if there is any interest income, what income? Can you send it outside India? No. Prohibited. So these are the 8 transactions which are prohibited. Under which schedule? Which act? Under the current account transaction. What transaction? Are you guys clear with this? There are how many transactions? 8 transactions. How many transactions? 8. Please. You can draw foreign exchange for Nepal and Bhutan. In Nepal and Bhutan, there is a free Indian currencies. You can. No, you can draw foreign exchange for Nepal and Bhutan because in Nepal and Bhutan, you can use Indian currency itself. There is no prohibition as such. Where it is mentioned? Huh? No, it is not. It is not prohibited. Only. Yeah, it can be exempted by who? RBI. That is not mentioned in the what? Schedule 1. Clear? So only 8 transactions. How many? 8 transactions which are prohibited as per which schedule? Schedule 1. Are we clear with this? Yes or no? So let's discuss one questions for this. Let's discuss first question. Can you guys answer this question, please? First one. Can you answer this question, please? An Indian resident import what? Machinery. Fast, guys, fast. Machinery from where? In where? UK. For installing is what? Factory. Current account transaction, capital account. Second one. An Indian resident import machinery from a vendor in UK for installing in his factory and a credit of how many months? Current account, capital account. Current account. Short term credit. Next one. An Indian resident transfer US dollar 1,000 to his NRI brother in New York as a gift. Current account, capital account. Current account. Current account, capital account. Current account. Next one. Can you guys answer this question? If you answer this question, I'll get a conceptual clarity. Let's read everybody. This question was not asked in the examinations. I have given this question for conceptual clarity. Let's read. What is the first question? An Indian resident wins a lottery of how much? In which state? Can they remit this amount to their accounts in India? Why? Because it is what? Prohibited. As per which schedule? 1. Under what transaction? Current account transaction. Second one, an individual in India wants to send how much? To a friend living where? To buy a what? A lottery ticket and participate in the what? Online football sweepstakes. Is this allowed or not allowed? Third one, ABC Limited, an Indian company. What company? Plans to make an equity investment in a joint venture company. Located where? Instead of sending the funds, ABT Limited exports certain machinery and treats the export value as its what? Capital contribution in the joint venture. To support the transaction, company hires a foreign consultant. And to that foreign consultant, can they pay commission? Allowed or prohibited? Because they are exporting the goods towards what? Equity investment. What investment? Fourth one, Global Autos Limited, an Indian subsidiary of a what company? Earns 50 crores revenue. It plans to remit 10 crore as a dividend to its what company? Foreign parent. However, it is a sector where dividend balancing is required. And it exports are only how much? How much? Now the question is, can they pay dividend of 10 crores? What is the revenue from export? How much they can pay? Only how much they can pay? 3 crores. Because for them, what is applicable? Dividend balancing. What balancing? Means they have to pay dividend only to the extent of what is earned foreign exchange earned. How much they want foreign exchange? How much they can pay? Can they pay beyond 3 crores? No, not allowed. Next one. Darjeeling Teas Limited exports a tea to Russia. Under what scheme? Rupee State Credit Scheme or route, and wants to pay how much commission? How much? Is it allowed? Maximum how much? 10%. Steelworks Limited export steel under the what? RSPR. And they want to pay 5% commission. What is RSPR? Rupee State Credit Route. Can they pay 5% commission? Yes or no? No. Why? Because that exemption is available only for what? Tea and tobacco. What they are exporting here? Steel. Clear? Last one. Ravi, an Indian resident, subscribes to a US based callback service. Allowed or not allowed? Not allowed. Last one. Zara, a US based company, has a special non resident rupee account in India for its business operations. It earns interest income of how much? On the funds lying in the account and want to remit it abroad. Can they remit it? Allowed or not allowed? These are the 8 transactions. How many transactions? Which are what? Under this schedule. Schedule 1 of what? Remember, what is the first one? Remittance out of what meanings? Second one. Income from horse race or any hobbies. Third one. Remittance for purchase of lottery tickets, band magazines, football pools and sweepstakes. Fifth one. Payment of commission on exports made towards an equity investment in a joint venture or wholly owned subsidiary of an Indian company. Fifth one, payment of dividend. Payment of what? Where what is applicable? Dividend balancing is applicable. Sixth one, payment of commission on the export under what route? Rupee state credit route. Except how much? Up to 10% of the export made on what? Tea and tobacco. Last one, callback services. Eighth one, remittance of interest income on the funds held in what? Non-resident special rupee scheme. These are the prohibited what transaction? Current account transaction. As per which schedule? Schedule what? 1 of the family. Next one. Schedule 2 provides the transaction which requires whose approval? What government? Central government approval, but these provisions are not there in your material, so we will not discuss that topics. There are separate ministries whose approval are required. For example, if you are going on a cultural visit, and if it exceeds more than 2,50,000 US dollars, you need approval of who? Ministry of Human Resource and HRD. Ministry of HRD. Those transactions are not there in your material. We will not discuss that particular transaction. So Schedule 2 provides a transaction which requires whose approval? Prior approval of central government is required. Does not apply to these cases where the payment is made out of what? Funds held in which account? Resident foreign currency account. If you are making payment for out of which account? Resident foreign currency account, what is not required? Approval of central government. Third one is important, based on which they ask questions in the previous examinations. Transactions which requires whose approval? Whose approval? What is the first one? First one is whom? Individuals can avail the foreign exchange facility for the following purposes within the limit of how much? 2,50,000 US dollar. In a what year? In a financial year. Up to how much? Per person, 2,50,000 in a year. If it exceeds 2,50,000 US dollar, whose approval is required? Under Schedule 3. Any additional remittances in excess of the said limit for the said purposes shall require approval of whom? Approval of the RBI. What is the first one? So we can classify these facilities for the individuals and other than individuals. For individual, what is the first one? Private visit to any country. Private visit to what? Except where? Nepal and Bhutan. That decision requires approval of the RBI. Second one? Gift or what? Donation. Gift or what? What is the first one? Private visit to the Nepal and Bhutan. Except which country? Sorry, private visit to any country except Nepal and Bhutan. Second one, gift or what? What transaction? Current account transaction. Allowed up to how much? 2,50,000 in which financial year? One financial year. Second one, going abroad. For what purpose? How much you can draw? Beyond that, RBI approval is required. Next one, immigration. That is, you are moving abroad permanently. How much you can draw? 2,50,000. Next one, maintenance of close relatives. Next one, travel for business purposes or attending a conference, specialized training, or for meeting the expenses of meeting medical expenses, or checkup abroad, or for accompanying as an attendant to a patient going abroad for what purpose? Medical treatment or checkup. Next one, medical expenses in connection with what? Connection with the medical treatment abroad. Last one, studies abroad or any other what transaction? Current account transactions. For all these transactions, you can draw up to how much? 2,50,000 US dollar. Under which schedule? 3. If it exceeds these, you need approval of who? What is the first one? Private visit. Except which country? Nepal and Bhutan. Next one, gift or donations. Third one, abroad for what purpose? Employment purpose. Fifth one, immigration. Sixth one, maintenance of close relatives. Next one, travel for business purposes. Next one, expenses in connection with the medical treatment abroad. Last one, studies abroad. If you're going for a studies abroad, can you draw foreign exchange? Yes. Up to how much? 2,50,000 in a financial year. But however, there is an exception. Beyond 2,50,000 you can draw, provided if you receive the quotation from the what? University under the liberalized remittance scheme. Without RBI approval, you can draw more than 2,50,000 US dollar for study purpose and also for medical visit, provided if you submit the proof to the authorized person. What person? Authorized persons. Are you guys clear with this? Next one is important, facilities for other than individual. Other than what? Now, if a person other than an individual, means other than a natural person, if you want to draw a foreign exchange exceeding the limit given under this one, requires whose approval? RBI approval. Whose approval? First one is what? Donation. First one is what? Keep this in mind. Donation. Second one is what? Commission. for sale of flats outside India. Third one is what? Remittance for consultancy services. What services? And the last one is what? Pre-incorporation expenses. Just first remember the provision. What is the first one? Everybody, what is the first one? Second one. Third one. For consultancy services. And the last one, pre-incorporation expenses. First one, listen. If you want to make a donation exceeding how much? 1% of the foreign exchange earnings during the preceding how many financial years? 3 financial years. How many financial years? Or in US dollar of how much? 5 millions. How much? 5 million. Means 50 lakh. How much? 5 million US dollar. Whichever is, whichever is, whichever is. What is the percentage? 1% of the foreign exchange earned in the preceding how many financial years? 3 financial years or 5 millions. How much? Whichever is, for what purpose? Donation to the foreign institution, educational institutions, or contribution to the funds promoted by the educational institutions, and contribution to a technical institution or a body or association in the field of what? Activity of donor company. What company? For this purpose, how much you can draw? 1% of the foreign exchange earned in the what? Preceding how many financial year? Or US dollar 5 lakh, whichever is less. Second one, commission for transaction. Commission for what? To the agents abroad for the sale of residential flats or commercial plots where in India exceeding how much? US dollar 25,000 or of the inward remittance received, whichever is what? First one is whichever is the second one is what? Whichever is more. What is the limit? 25,000 US dollar or of inward remittance, whichever is more, whichever is more. I have employed a person in the abroad to sell a flats in India to the person who are resident outside India. How much commission I can pay her or pay him? 25,000 US dollar for transactions or 5% of the inward remittance received, whichever is second one. Third one, remittances exceeding 10 million per project. For what services? In case of what project? Infrastructure project. And US dollar 1 lakh, not 1 lakh, 1 million per project for what? Other consultancy services procured from outside India. Infrastructure project 10 million. Other than infra project 1 million. That is the commission you can pay for what? Consultancy services. What services? Infra projects how much? Other than infra projects 1 million. Last one, remittances exceeding 5% of the investment. How much? It's brought into India or US dollar how much? 1 lakh, whichever is higher by any entity in India by way of what? Reimbursement of pre-incorporation expenses. If a company want to pay a reimbursed pre-incorporation expenses, what is the limit? 5% of the investment or US dollar 1 lakh, whichever is higher, whichever is what? For everything, whichever is higher. Expert first one. First one is what? Whichever is less. You guys tell me the provisions now. What is the first one? Donation. What is the first one? What is the limit? 1% of 3 years earnings or how many millions? 5 millions. Whichever is less. Second one, commission. How much you can pay? 25,000 US dollar or 5% of the inward remittance, whichever is more. Third one, remittance for consultancy services. How much? 10 millions for infra projects. Other projects, 1 million. And last one, reimbursement of free incorporation expenses. How much you can remit? 5% of the investment brought to India or 1 lakh US dollar, whichever is higher. Exceeding that requires whose approval? RBI's approval. These are the current account transaction. What transaction? Person who is resident but not permanently resident in India means he is a citizen of which country? Foreign state, other than what? Pakistan. Or an Indian citizen who is on deputation, that is temporary assignment to a foreign company's office, branch or subsidiary or a joint venture in India, may make remittances up to his net salary. What salary? Without any restriction. That is, a person who is resident but not permanently can remit his earning outside India up to his what salary? With approval, without approval? Without approval. Whose approval? I repeat, any person resident in India, what in India, but not permanently resident in India. Can he remit his salary without any restriction? Yes. Up to what salary? Next salary. Clear? Now, what do you mean by person resident but not permanently resident in India? Means he has not stayed for more than how many years? 3 years. How many years, sir? Means anyone who is living in India for employment or deputations for a specific period or a specific job or assignment not exceeding how many years? Then he is called as what? Resident but not ordinarily resident. Ordinarily, that person can remit up to his what salary? Net salary. Without limit or with limit? Without any limit and without any permissions. Are we clear with this? These are the provisions with respect to what transaction? Current account transaction. What transaction? So we have how many schedules? 3 schedules. How many schedules? First one, second one, approval of central government. Third one, approval of RBI. Clear with this? Yes or no? Let me ask you guys a question now. Listen, everybody. If I purchase machinery from abroad, what transaction? Take loan. Fast answers. Takes loan. Purchase a flat in USA. I want to pay commission for exports made towards equity investment. Allowed or not allowed? I want to pay a dividend in foreign currency where dividend balancing is applicable. Allowed or prohibited? Allowed or prohibited? I want to remit foreign currency for, I want to remit foreign exchange for callback service. Allowed or prohibited? I want to pay commission for consultancy services received for construction of flats. How much I can pay? 10 million or 1 million? 10 million for infrastructure. Construction of land is how much? 1 million. Only how much I can pay? 1 million. Beyond that, it requires whose approval? I want to go to abroad on a private visit. Can I draw foreign exchange? How much? Everyone should answer how much? 2,50,000. I want to send money for maintenance of my close relatives. Can I send? How much? One time in a financial year. I've already sent 1 lakh US dollars. How much more I can send? In this financial year or for the whole lifetime? Only for a financial year. Yes or no? Can I send foreign exchange through Hawala routes, Hawala or some fake routes? To whom I am supposed to send it? Who is an authorized person? Authorized dealer, money changer, offshore banking unit, or any person authorized by RBI. Authorized by. Is there any section number which prohibits dealing in foreign exchange other than through authorized person? Section number what? 3. Our current accounts transactions are permitted unless prohibited? Yes or no? Then we have what transaction? Capital account transaction. What transaction? If I take loan on a short term, if I take loan for 2 months, capital account transactions, current account transaction. Allowed or not allowed? Clear with this? Now, what if I want to pay a reimburse pre-incorporation expenses? What expenses? 6% of investment made. Allowed or not allowed? Maximum is how much? 5% of the inward remittances or not 25. 1 lakh US dollar, whichever is more. 25 is for commission for the sale of flat in India. Yes or no? That is how much? 5% of the inward remittances or 25,000 US dollar, whichever is higher. Are we clear with the current account transactions, everybody? Yes or no? Next one. Liberalized remittance scheme, LRS scheme. Important LRS scheme. What is LRS? It's a scheme for whom? Individuals. Scheme for whom? Means natural persons. So under this scheme, an individual can remit up to how much? Repeat, up to how much? In a what? In a financial year. So it's the core purpose is to simplify and facilitate the process of resident individuals in India to remit US dollar how much? 2,50,000 per what? Year. The scheme is available only to whom? To whom? Resident individual, including whom? Minors. Underline this. Minors. This limit is an aggregate ceiling that covers all the remittances made by the individuals under what? LRS during the financial year, encompassing both current account transaction as well as what? Capital account transactions. So you can use this 2,50,000 US dollar both for what transaction? Current account transaction as well as what transaction? The scheme allows the family members, typically defined based on the Income Tax Act, to consolidate their LRS limits for permissible what transaction? What transaction? Current account transaction. But however, clubbing or consolidating the limits for capital account transaction is generally not permitted. For example, let's say there are two family members. Both of them are going abroad. Can they combine their limit? Yes. And they can draw up to how much? 5 lakh. But can they combine their foreign exchange for the purpose of buying a flat outside India? Allowed or not allowed? Not allowed. So clubbing or combining is allowed only for what transaction? Current account transaction. What transaction? Are we clear with this? Yes or no? What scheme? LRS. Up to how much it is allowed? In a what year? In a financial year. So what are the current account transactions? Same thing, whatever we discussed. For this current account transaction, you can draw up to how much? 2,50,000 US dollar. Without whose approval? To whom you can draw foreign exchange? Authorized person. What person? What is the first one? Private visits. Second one, gift or donations to individuals or organizations. Third one, for what purpose? Fifth one, immigration from India. Next one, maintenance of close relatives. Next one, travel for business, attending conferences or specialized training. Next one, with a medical treatment abroad. Next one, expenses in connection with what? Studies abroad. But most important, expenses with respect to medical treatment and expenses with respect to the studies abroad, you can draw more than 2,50,000 US dollar without the RBI approval, provided you submit the valid documents. What documents? Valid documents. Only for these two purposes. Clear with this? Next one, purchasing the objects of art like any paintings, that is also considered as what transaction? Current account transaction. Any other current account transaction not explicitly prohibited. Residents are prohibited from gifting foreign currency to another resident for the credit of their what account? Overseas account. Under what scheme? LRS scheme. What scheme? You cannot gift the foreign currency to one more resident to credit where? Outside India. Credit where? That kind of exchange is not allowed as per which scheme? Liberalized remittance scheme. Clear? So based on this, there can be a question in the examination. Question in the what? Next one, permitted capital account transaction under the LRS scheme. What scheme? What you can do? Can you open a foreign currency account? Purchase the immovable property? Make overseas investments? Means you can purchase the shares of foreign company. Allowed or not allowed? Allowed. Next one, setting up a what? Wholly owned subsidiaries, joint ventures abroad for what purpose? Bona fide business purposes. Extending loans to whom? NRIs and PIOs, persons of Indian origin or their relatives, as per the defined as per which are companies. For all these purposes, you can use the money drawn in which one? LRS scheme. What scheme? Clear with this? These are the capital account transaction. What transaction? For which you can use the money drawn in the LRS scheme. So till now we discussed section number 5. Section number what? Which deals with what transaction? Current account transaction. What transaction? Then section number 6 deals with what transaction? Capital account transaction. What transaction? Now I want everyone to repeat with me whatever the topics we discussed till now. What is the first topic we discussed? I want answers from each and every one of you. What is the first one? Second one. Third one. Person resident in India. Fourth one. Fifth one. Sixth one. Regulation of foreign exchange. Seventh one. Current account transaction. In that, how many schedules? What are three schedules? Schedule 1, Schedule 2, Schedule 3. What is Schedule 1? Schedule 2. Approval of central government. Schedule 3. Approval of RBI. Then we discussed what? LRS scheme. What is LRS scheme? Liberalized remittance scheme. Up to how much is allowed? In a financial year per person. In a financial year. Can it be clubbed for current account transaction? Capital account transaction? Allowed or not allowed? Not allowed. Are we clear with this? Then comes section number what? 6. Section number what? What is section number 6? A transaction. You guys tell me what is capital account transaction? A transaction which alter assets, liabilities, including the contingent liabilities, where outside India, a person's where resident in India. Or transaction? Capital account transaction. Or it alters assets or liabilities in India of a person what? Resident outside India. Resident. That is called as what transaction? One more time. What is capital account transaction? A transaction which alter assets or liabilities, including contingent liabilities, where outside India of a person, or assets or liabilities where in India of a person resident outside India. That is called as what transaction? Capital account transaction. And we already discussed what is current account transaction. Any transaction other than what transaction is called as what transaction? Current account transaction. Who can impose restrictions on capital account transaction? RBI. It cannot restrict the foreign exchange for the payment due on what? Amortization of loan. What is amortization? Repayment of the loans or depreciation of direct investment in the what course of business? For the payment of these purposes, who cannot put restrictions? RBI. Who cannot put restriction? RBI. Are we clear with this? Yes or no? Section number 6, subsection what? 4. Holding of an asset outside India by whom? Person? Can a person resident in India hold assets outside India? Can a person resident in India hold assets outside India? If he holds assets outside India, it is called as what transaction? Capital account transaction. A person resident in India may hold, own, transfer, or invest in what currency? Second one, foreign securities. Third one, immovable property. Where? If they were acquired while the person was what? Non-resident, or they were inherited from what? He can do it freely without anyone's approval if those assets or securities or the currency was acquired when he was outside India, or it was inherited from a person where? Resident outside India. I was abroad. I purchased some flat. Can I sell it? Yes. Do I need approval of RBI for that? No. Clear with this? This is the first transaction. Based on this, there can be a practical question. What question? Section number 6, subsection 4. Capital account transactions. One more time. A person where? Resident in India. Can he hold, own, transfer, invest? In what currency? Second one, foreign securities. Third one, immovable property. Where? Outside India. If they were acquired when the person was what? Non-resident. What resident? Or they were inherited from a what? Non-resident. In these two cases, he can deal with this without whose approval? RBI's approval. Next one, it covers the following transaction. What transaction? What is the first one? He can open the foreign currency accounts and maintained by such person when he was resident outside India. Second one, income unto the what? Employment. Or business or locations outside India when he was resident outside. Income from what? Investment when he was resident outside India. Income from gift or inheritance when he was resident. Foreign exchange including any income arising therefrom and conversion or replacement or accrual to the same held outside India by a person resident in India are acquired by way of what? Inheritance. So if he has acquired these things by inheritance or when he was resident outside India, can he deal with this? Yes. Without whose approval? RBI's approval. Are we clear with this, everybody? Yes or no? Next one, section number 6, subsection 5. Holding an asset by a person resident where? Resident where? A person resident outside India may hold, own, transfer, invest in what currency? Or in what securities? Or Indian immobile property if these were acquired when they were what? Resident in India, or they were inherited from a person who was what? Resident in India. Same way. If Indian can hold the assets outside India when he was resident outside India, or if he got inherited from the person who was resident outside India, in the same way, a person resident outside India can also acquire the assets or securities in India when he is resident in where? India, or if he got those assets through inheritance from the person who is resident in India without whose approval? RBI's approval. They may ask this question in the examinations. Keep the section number 6, subsection 5. Remember, section number 6, subsection. Are we clear with this, everybody? Yes or no? What transaction? What transaction? Capital account transaction. What is capital account transaction? Any transaction other than no transaction which alter the assets or liabilities, including contingent liabilities of a person resident in India, where outside India. Or assets or liabilities of a person in India of a person resident outside India. That is called as what transaction? Capital account transaction. Generally, capital account transactions are prohibited unless permitted. Section number 6, subsection 5 provides that a person resident in India can own, transfer, or hold any assets outside India or foreign security or foreign currency outside India when he was what? Resident outside India, or if he got inherited from what? Person resident outside India. Are we clear with this, everybody? Next one. Classes of capital account transactions for a person where? Resident in India. What type of capital account transactions a person resident in India can do? What is the first one? Everyone should repeat. What is the first one? Invest in what securities? Second one, foreign currency loans. Raised in what? India and abroad. First of all, is it a capital account transaction? Yes or no? Why it is capital account transaction? It creates what? Liability. What is the first one? It creates what? Asset. Third one, transfer of what property? Current account transactions, capital account transaction. Very good. Next one, guarantee issued in favor of what? Person resident outside India. Current account, capital account. Why? It creates what? Liability. What liability? Contingent liability. What liability? If he defaults, then you are liable to pay, right? Resta, no. Next one, next one. What is the next one? Export, import, holding of currency or currency loan. Currency or what? That also is considered as what? Capital account transaction. Not the goods here, currency notes. What notes? Next one, loans and overdraft from a person where? Capital account, current account. Why? It creating what? Liability or asset? Think and answer. Next one, maintenance of what account? Foreign currency account. Capital account, current account. Why? It's an asset, right? If you have an account outside India, the bank balance is what asset? Yes or no? Next one, next one. Taking out what policy? Current account, capital account. Why? Asset. Next one. Loans and overdraft to a person where you have given a loan to him. Asset or liability? Asset or liability? Current account, capital account. Allowed or prohibited? Allowed. With the permission of whom? RBI. Next one. Remittance outside India of capital assets of a person where? Resident in India. Resident where? Remittance of outside India of capital assets of a person where? Resident in India. Person is resident in India, but he is remitting the assets of whom? Outside India. means selling outside India. It is also considered as what transaction? Capital account transaction. Last one, what is derivatives, which derives their value based on the underlying securities. They're all called as what transaction? Capital account transaction. Next one, classes of capital account transactions by whom? Person, resident. What he can do the same thing what Indians does it. Correct? What is the first one? Fast guys, let's read. Investment in Indian securities and organizations. Reza, no. That is what called as FDI. Called as what? When they invest, capital account transaction. Second one, transfer of which property? Immovable property. Where India. Current account, capital account. Next one, guarantee in favor of whom? On behalf of the person in India. You can also provide the guarantees. Next one, import and export of currency notes into or from India. Next one, deposit between the person resident in India and persons where? Residents outside India. Deposit balances, foreign currency accounts where in India. Remittance outside India of what? Capital assets in India. Matlab, you have earned some money by doing employment in India. That amount is there in the bank account, and you want to send it outside India. It is called as what transaction? Capital account transaction, because you're sending your asset outside India. Same like selling a property. Yes or no? Last one, to take what? Undertake the derivative contract. These are the transactions which are allowed for both resident as well as the what? Non-resident. This list is there in your material as well. Next one. This one is most important. Prohibited transaction. Prohibited capital account transaction. What transaction? Based on this, there can be a questions in the examinations. The following type of capital account transactions are prohibited for a person what? Resident outside India. Resident where? Now you tell me, can a person resident outside India invest in Indian securities? Or no? Can he buy a flat, land? Yes or no? But there are few transactions which are prohibited. You cannot invest. What is the first one? No persons, there is a first one, general prohibition. No person shall undertake, sell, draw foreign exchange to or from an authorized person for any what transaction? Capital account transactions, unless it is what? Permitted. A resident individual may draw foreign exchange up to how much? Per financial year. For capital account transactions through what scheme? Or what scheme? LRS schemes. Funds drawn. Funds what? Drawn. Cannot be remitted to which country? FATF. Foreign Action Task Force. These companies are in the blacklist. To those countries you cannot send the money. Next one is important. This list is important. So if they ask question in the examination with respect to the prohibited capital account transaction, first we should write general prohibition. Means capital account transactions are prohibited unless permitted. A resident individual can draw up to how much? 2,50,000 US dollars under what scheme? LRS scheme, for the purpose of what transaction? Capital account transaction. But however, you should not use that money for what? To remit to the which countries? FATF countries. Next one, specific prohibitions. Important here. A person resident outside India, person resident where? Cannot invest in any form, whether it is equity or partnership, in an Indian entity. What entity? What entity? When I say entity, it includes company, partnership firm, LLP, and all these things. So a person resident outside India, resident where? Person resident where? Cannot invest either in the form of equity or in the form of capital in an entity which is engaged in the following activity. What activities? What are they? What is the first one? In the business of what fund? Chit fund. What fund? Allowed or not allowed? Not allowed. Register of chit fund may allow. With the permission of register of chit fund, what you can do? You can do the investment. But if it is without the approval, can you do the investment in chit fund? No, not allowed. Second one. And the next one is what? Nidhi company. What companies? Can a non-resident Indian invest in the Nidhi company? No. Third one, in the agricultural or plantation activities. Allowed or not allowed? Not allowed. Fourth one, in the real estate business. What business? Or the construction of what houses? Farmhouses. Real estate business, construction houses, not allowed. Next one is what? Trading in what rights? Transferable development rights. What rights? Means generally when government acquires your property, instead of that property they give some right, purchase property somewhere else. Those rights cannot be transferred. And in those rights, who cannot invest? Person resident outside India. Person resident. So these are the transactions. What transaction? Capital account transactions which are prohibited. Which are what? Clear? Can you remit the amount you have drawn under LRS scheme for FATF countries? And one more thing is dealing with North Korea is prohibited. Clear? So these are the what transaction? Prohibited. What transaction? Capital account transaction. What transaction? What is the first one? What is the first one? Second one. Third one. Agricultural and plantation activities, real estate. Next one. Uh-huh. Fifth one. Real estate. Fourth one is real estate. Fifth one. TDRS. And the sixth one is what? North Korea. These are the activities which are what? Prohibited. What transaction? Capital account transaction. What transaction? Are you guys clear with these? Yes or no? Now, listen. See, mera intention itna hi hai. It is not like we will finish all the chapters. Once we finish, we should be in a position to answer all the previous year questions. That is the intent of this revision class. Clear? I want everyone to participate. Trust me, by the time I finish this chapter, we will be in a position to answer all the questions. Clear? Yes or no? Now you guys tell me, what are the topics we discussed till now? What is the first one? Foreign exchange. Second one. Third one. Person resident in. Fourth one. Person. Fifth one. Sixth one. Current account regulation of foreign exchange. Seventh one. Current account transaction. How many schedules? What are three schedules? Schedule 1, Schedule 2, Schedule 3. What is Schedule 1? Prohibited current account transaction. Schedule 2. Approval of. Schedule 3. Approval of RBI. Then what we discussed? LRS. Then what we discussed? Current capital account transaction. What transaction? In that, what we discussed first? Section number 6. Definition of capital account transaction. Then section number 6, subsection 5, which provides 4 and 5. Current capital account transactions for a person resident in India and person resident outside India, which can be done without whose approval? RBI's approval. Then remaining everything requires whose approval? RBI's approval. No. Then we discuss permitted capital account transactions for the person resident in India and person resident where? Outside India. Then what else we discussed? Prohibited capital account transaction. Now I want everyone to tell me what are those prohibited capital account transactions. What is the first one? Chit fund. Second one, Nidhi. Third one, agricultural plantations. Fourth one, fifth one, TDRS. Sixth one, transactions with what Korea? North Korea. Prohibited. Are we clear with this? Yes or no? Next one. Next one is section number 8. Section number what? 8. Realization, repatriation, and surrender of what currency? Foreign currency. You guys tell me, if you have earned any foreign exchange by export of goods or providing services, are you supposed to repatriate back to India? Yes or no? You should realize and should bring it back to the India either by selling it to whom? Authorized person. What person? What person? Or you can use that money to settle your obligations outside India. Whatever the foreign exchange you have earned, you should realize it. Once you realize it, either you should sell it to whom? Authorized person, or you should what? Use it for what purpose? To settle the obligations outside India. Obligations where? Or to acquire outside India. So realization and repatriation is compulsory within the specified time limit. What limit? What is the time limit? 7 days. How many days? And in few cases, is how many days? 90 days. How many days? No. Let's discuss the provisions. What is the first one? What is the first one? Every person, resident where? To whom what is due? As accrued must take all reasonable steps. What steps? To realize such foreign exchange and repatriate to where? India. No person shall do or refrain from doing any act which results in delaying the receipt of what exchange? foreign exchange. No person shall do or refrain from doing any act which results in the foreign exchange ceasing in whole or in part to be receivable. Means you should take all the steps to realize and to repatriate that foreign exchange to where? India. Next one, manner of repatriation, important. Manner of repatriation means how can you repatriate, bring back that realized foreign exchange to India. What is the first one? Sell it to what person? You sell that foreign currency and get which currency? Indian currency. What currency? Second one, retain or hold it in a what? Account. With which person? Authorized person. You can open account with him and you can keep that foreign currency in the foreign currency account. And the third one is what? Most important. Use it for what purpose? Discharge of a debt or a liability denominated in what currency? Foreign currency. These are the three modes of repatriation of foreign exchange. What is the first one? Selling it to what person? Second one, retains in an account with a what person? Authorized dealer in India. Third one, use it for discharge of a debt or liability denominated in which currency? Foreign exchange. What exchange? Are we clear with the repatriation, everybody? Is it your duty to realize? Repatriate? How many ways? How many ways? What is the first way? Sell it. Second one, keep it in an account. Third one, use it for settlement of obligation. What is the time limit? What is the time limit in which supposed to repatriate it? Any services or any obligations, income from assets sold or inheritance, settlement, gift within how many days? 7 days. Well, how many days? Other than these cases, how many days? 90 days. How many days? Unutilized foreign exchange acquired, purchased by a person resident outside India for declared purpose but not utilized must be surrendered to an authorized person within how many days? You have acquired foreign currency, but you will not use it. Are you supposed to surrender it back to the authorized person? Within how many days? 60 days. Are how many days? 60 days. Are we clear with this, everybody? Yes or no? First of all, what is realization? You have to realize the foreign exchange due. Is it your obligation? Within how many days? 7 days. How many days? Other than those cases, how many days? Once you realize, are you supposed to repatriate? Are you supposed to repatriate? In how many ways? What are 3 ways? Selling it to who? Authorized person. Second one, retaining the account with the authorized persons. Third one, use it for settlement of obligations in what currency? Foreign currency. What currency? Are you guys clear with this? Realization and repatriation. Follow? Next one. An individual resident in India must surrender received, realized, unspent, unused foreign exchange within how many days? 180 days from the receipt, realization, purchase, acquisition, or returns to India as applicable. Once it returns to India, we should surrender within how many days? How many days? 180 days. Next one. For travel purpose, how many days? Unspent foreign exchange from a foreign travel by a person outside India. Person what? Outside it by a person outside India within 90 days. How many days? From return to what? India. When it is in the form of what currency? Currency notes and coins. Within how many days? How many days? 90 days. But if it is in the form of checks, how many days? 180 days. You have drawn foreign currency for foreign travel. Once you return, unspent should be returned within how many days? 90 days. If it is checks and foreign travel, other documents, 180 days. Next one, remittance of assets. Remittance of what? This is one more topic based on which there can be a practical question in the examination. One last topic. Based on this, there can be a practical question in the FEMA. One more time. What is the first topic I discussed? Foreign exchange. Second one. Third one. Person resident in. Fourth one. Person. Fifth one. Sixth one. Current account transaction. Regulation of foreign exchange. Sixth one. How many schedules? What are 3 schedules? Schedule 1, Schedule 2, Schedule 3. Next up. LRS. After that LRS, current account, capital account transaction. In that we discuss section number 6, subsection 4, subsection 5, then prohibited capital account transactions and permitted capital account transactions for the Indians as well as the person outside India. Then what else we discussed? Prohibition is done. Then we discuss what? Repatriation and realization of what exchange? Foreign exchange. We discussed what is realization, what is repatriation, and what is the time limit for repatriate. To repatriate to India. Clear with this? Next we have remittance of assets. Remittance of what? Asset. Remittance of asset. Is it a current account transaction, capital account transaction? Current account, capital account. Does it require approval of RBI? Yes, but there are few exceptions where remittance can be done without whose approval? RBI's approval. Whose approval? They can ask questions based on this in the examination. Now, for example, tell me, I'm a foreigner, but in India on an employment basis. What basis? If I earn salary in India and if I keep that foreign Indian currency, I'm earning in Indian rupees. Obviously, they'll pay in Indian rupees only now. And I want to take that back to my country. I have to exchange it, right? Is it a current account transaction or capital account transaction? What transaction? Capital account transaction. What transaction? Because once I receive the salary, if it is in an account, it becomes what? Asset. And if I want to take it back to my country, it is a what transaction? Capital account transaction. What transaction? I have a property in India and I want to take it back to, I want to sell this. And whatever the proceeds comes, I want to remit it to outside India. It is what country? What transaction? Capital account transaction. What transaction? So those are the transactions which come under these topics called as remittance of assets. Remittance of what? We will discuss what remittance of assets requires approval of whom? RBI. Approval of whom? Let's discuss. What is remittance of assets first of all? What is the meaning? What is remittance means what? Transfer of funds. Transfer of what? From where? To where? To where? One more time. What is remittance of assets? Transfer of funds. From where? To where? Representing the what? Deposits with which banks? What banks? Second one, firms are the companies. If you have kept any deposits with the banks, are the companies, are the firms, and if you want to transfer it outside India, it is what transaction? Capital account transaction. It is called as remittance of assets. Remittance of what? Assets. Second one, provident fund balances. Third one, superannuation or pension benefit. Next one, insurance claim, maturity proceeds. Next one, sale proceeds of what? Shares, securities, immovable property, other financial and non-financial assets. All these are considered as what? Remittance of assets. Remittance of what? One more time. What does remittance of assets means? Transfer of funds from where to where? Representing the what? Deposits with the banks, firms or companies, provident fund balances, superannuation or pension benefits, insurance claims or maturity proceeds, sale proceeds of shares, securities, immovable property or other financial or non-financial assets. All these are called as what? Remittance of assets. Any remittance of assets requires approval of RBI, except few. We'll discuss what are those remittances which does not require approval of RBI. Approval of RBI. Let us discuss the first one. What is the first one? Remittance by whom? Arey bolo, remittance by whom? Individuals. Not being a what? NRI. What is NRI? Non-resident Indians. And what is PIOs? Persons of Indian origins. These persons can remit proceeds out of assets up to 1 million. How much? How much? Up to how many millions? 1 billion in a financial year. Without whose approval? RBI's approval. Let's read. Let's read. Authorized dealer. What dealer? Is authorized dealer is an authorized person? Generally, the banks are called as authorized dealer. Authorized dealer may allow remittance of assets by which is foreign national. What national? Up to how many US dollar? 1 million per what? Year. And if that remittances is out of what's the first one? Person has retired from what? Employment in India, or the person has inherited from a person resident of India, or a non-resident widow. What widow? or widower and has inherited assets from his or deceased spouse who has an Indian national resident in India, or the remittance is in respect of balances held in a bank account by a foreign student who has completed his or her studies, provided such balances represents the proceeds remittances received from abroad through the normal banking channels. So these are the assets. These are the assets out of which you can remit up to how much? 1 million in a financial. For example, I am a foreigner, employed in India, retired. I want to take out whatever I earned in India. Can I take out from India? Yes. Up to how much? 1 million. Without approval, with approval. Without, simple as that. Second one. What is second one? If a person has got some property in India. What in India? What in India? Can I sell it and transfer that proceeds to outside India? Yes. Up to how much in a financial year? 1 million. Third one, a non-resident widow or widower means a lady got married to a person who is resident in India. He is dead. She gets that inheritance of assets and she want to remit these assets outside India. Can she do it? Yes. Up to how much? Up to how much? In a what? Financial year. Sir, can't she remit more than that? Yes, sir, she can do with the approval of whom? RBI. What is the last one? You are a foreign student, came to India, you have money in foreign, you have taken Indian currency. What currency? You have done the foreign exchange. You are a US person, comes to India. You exchange your dollars to India. You have money balance in the account. You done with your studies. You want to go back to your country. Can you convert that Indian currency into foreign currency? Yes. With approval, without approval. These are the remittances of assets which are allowed by an authorized dealer without whose approval? RBI's approval. For whom? For an individual. For whom? Individuals. Not we who? NRI and PIOs. NRI one what? What is the first one? What is the first one, guys? Retirement. Second one, widow. Third one, inheritance. Fourth one, foreign student. How much? How much? 1 million. Remember this. How much? 1 million. Per how many financial year? One financial year. Are we clear with this, everybody? Yes or no? Next one. Remittance by NRIs. Remittance by whom? And PIOs. Authorized dealers may allow remittance of assets by NRIs and PIOs. Up to how many? Used how much? 1 million. Out of balances in their what? Non-resident NRO accounts or sale proceeds of assets or assets acquired in India by way of what? Inheritance or legacy. Inheritance or what? Any PIOs or NROs. They can remit the proceeds out of assets in India. Up to how much? Up to how much? 1 million. Next one, in respect of assets acquired under the what? Deed of settlement. Deed of what? There is a foreigner. You are an Indian, but living in USA since many years. You are a person of Indian origin, but you are citizen of USA. You have property, ancestral property in India. Now partition happened. You got an asset. You sell the asset. You want to take the money abroad. Can you take that money abroad? Yes. Up to how much? 1 million. With approval, without approval. With approval, without approval. Up to how much? 1 million. Or if it is out of will, a father has made a will in favor of who? His son. The son is a person of Indian origin, but not an Indian. And he got the asset and he want to sell it. He sold it. He got the money. Can he remit it outside India? Yes. Up to how much? 1 million. Without whose approval? RBI's approval. This is for person of Indian origin and NRS. And what? NRS. Next one. Remittance by companies. Remittance by what? Can companies remit money outside India? Yes. But there is a condition. What are the condition to be satisfied? On the directions issued by the court or official liquidator in case of what winding up? What winding up? Voluntary winding up. Document to be submitted, auditor certificate confirming that liabilities in India have been either fully paid or adequately provided for. Auditor certificate to the effect that winding up is in accordance with the what? Provisions of Companies Act, or winding up otherwise than by the court. An auditor certificate that no legal proceedings are pending in court in India. Means foreigner established a branch in India. They close the branch. Some assets are left, sold it. Whatever the funds comes out of liquidation, can it be transferred outside India? Are yes or no? On the submission of what document? Following documents. What are documents? Auditor certificate. What certificate? Next one, remittance are winding up proceeds of any what? Branch or office. This one is for company and this one is for what? Branch or office. Branch or what? Again, whose certificate is required? Auditor's certificate. Whose certificate? Yes or no? Let us discuss what are those conditions. Is approval of RBI required? RBI required? Yes. Following document to be submitted, a copy of Reserve Bank permission. Second one, manner in which remittable amount has been arrived, confirming that all liabilities in India, including arrears of gratuity and other benefit to the employees, have been fully met or adequately provided for, and confirming that no income accruing from sources outside India has remained what? Unrepatriated to India. Means whatever the foreign exchange earned, it's already brought back to India. So once all these things are confirmed, whatever the proceeds comes out of sale of assets by closure of branch or office can be remitted where? Outside India. Remitted where? And also we need report from whom? Register of what? Companies. And these are the provisions with respect to remittance of assets. Remittance of what? Remittance of what? Now repeat. What is the first topic I discussed? Everybody, what is the first one? Foreign exchange. Second one. Third one. Person resident in India. Fourth one. Fifth one. Sixth one. Regulation of foreign exchange. Seven one. How many schedules? The next one. Capital account transactions. LRS. Very good. Next one. Capital account transaction. In that there are how many topics? Two topics. Section number 6, subsection 4, subsection 5. Then prohibited current account, capital account transaction. Then what we discussed? Realization, repatriation of foreign exchange. Then what else we discussed? Remittance of assets. Up to how many million? In the remittance of assets, there are how many subtopics? 4. What is the first one? Individuals other than NRIs than PIO. Next one, NRIs and PIOs. Next one, closure of liquidation proceedings of closure of company. Next one, branch officers and branches and officers. Branches and what? No. Next one is important. Possession and retention of what currency? Foreign currency and coins. Based on this, they asked question in the previous examinations. 3 more topics, not 3 more topics, max to max 4 topics, and we are done with this chapter. Clear? Concentrate. Let's start. Possession and retention of what exchange? Simple say simple. We have 4 categories. How many categories? I want everyone to repeat. How many categories? 4 categories. What is the first one? What person? अरे इसका काम ही वो करना है और ಕೆಲಸನೇ ಅದು ಏನ್ ಮಾಡಬೇಕು he can deal with what exchange foreign exchange so authorized person can keep both foreign exchange as currency notes as well as coins currency notes as well as what with limit without limit with limit without limit without limit who can keep foreign exchange without limit authorized person what person second one any person what person can keep coins without limit clear next one resident in India what in India a person resident in India may retain the foreign currency notes, bank notes, foreign currency, traveler check up to how much? US dollar 2000 in aggregate, provided such foreign exchange was acquired in the following way. Simple say simple. The moment I ask question about retention of foreign exchange, what should come to your mind? First thing, authorized person. What person? With limit, without limit. Any person, foreign kinds. With limit, without limit. Any person resident in India, person what? Resident in India can keep foreign exchange up to how much? 2000 US dollars. Provided if he has acquired that foreign exchange in what ways? Following ways. What is the first one? During his visit where? Abroad from any person not resident in India who is on a what? Visit to India. Visit to what? That is why this you would have seen in the YouTube vlogs, like wherever they go, the shop owners ask for what? Foreign dollars. A person has come to India, he's a foreigner, and he gives you a gift of 2000 US dollar. Can you keep it? What if he gives a gift of 5000 US dollars? You're supposed to what? Repatriate. How much you're supposed to repatriate? 3000 US dollars. Can you keep 2000 US dollars? What if he gives everything in coins? Can you keep 5000 US dollars in coins? Arisa, no. Thank you very much. Next one, a honorarium or a gift for services rendered in settlement of what obligation? Lawful obligation. Next one, a gift while on what? Visit abroad. Unspent foreign exchange acquired from an authorized person for travel where? Abroad. Any unspent foreign exchange should be repatriated within 90 days. Correct, right? But however, can I keep the foreign exchange? Yes, up to how much? 2000 US dollar. Well, how much? This is for person resident in India. What a person resident in India but not permanently resident? Not permanently what? Can he keep foreign exchange? Yes. With limit, without limit. With limit, without limit, without any limit. Means the person who has come to India. Who is person resident but not permanently resident? More than how many years? 3 years. That person can keep without any limit. So can you guys write if they ask question based on this in the examination? Retention of what exchange? Array what exchange of foreign exchange. Are we clear with these? One last important topic with respect to acquisition or transfer of what property? Immovable property. Where? In India. Who can acquire immovable property in India? Person who is resident where? Outside India. Subject to the following conditions. I want everyone to concentrate. Let's start. What is the first one? General rule. What rule? A person resident outside India, can he hold, own, transfer, invest in what property? Resident where? In India. If such property was acquired, held, owned by him when he was resident in India or inherited from a person what? Resident in India. Tell me this provision is which section number? Section number 6, subsection 5. Very good. It is allowed. There is no requirement of whose approval? RBI's approval. Next one, next one, next one, next one, next one. Acquisition or transfer of immovable property by whom? NRI or OCI. Are there any restriction to be complied with? Yes. First of all, who is NRI? Very good. A person residing outside India but a citizen of what? India. That person is called as what? NRI. Then who is OCI? A person resident outside India but who is what? Registered as a overseas citizen of India, card holder. Then he is called as what? OCI. Permitted acquisition, can they acquire by purchase? Can they acquire a property in India? Except what property? Agricultural land, plantation property or farmhouses. They cannot purchase this one. Can they acquire it by way of gift? Yes or no? From what? Person resident in India. Or by way of what? Inheritance. From a person resident outside India or a person resident in India. Permitted transfer. Can they transfer to a person resident in India? What properties? Any property, including agricultural property. But however, to an NRI or OCI, immovable property other than what? Agricultural land, plantation property or farms. If you interpret properly, this provision makes a sense. Why? Because an NRI can transfer any property to NRI except what property? Agricultural property. Because NRI cannot acquire what property? Agricultural property. But if I am an NRI and if I have an agricultural property, I have acquired long back, can I transfer it to that to the person resident in India? Yes or no? But to an NRI, why? Because NRI cannot purchase what property? Agricultural property. Clear with this? Next one. Joint. This one is most important. I mark it important. Third one and fourth one is most important, based on which there can be question in the examination. Acquisition of assets. In that, Third one and the fourth one is most important. Joint acquisition by the spouse of an NRI or OCI. What is spouse? Husband or wife of an NRI or OCI. Can they acquire property jointly in India? Yes. What are the conditions? A foreign national spouse, a foreigner, may acquire one immovable property. Keep this in mind. For example, let's say, uh, some of you got married to the foreign national. Let's say foreigner. Okay, you want me to take your example? Okay, Kavya got married to a Kelvin. Kelvin is a foreign national. He's from Pakistan. Now, not Pakistan. Okay, let's say he's from England. So Kavya got married to Kelvin. He is foreign national. Now he want to acquire property in India, in Bidar, not Bidar, Ballari. He want to purchase a property in Ballari. Can he purchase property in Ballari first of all? He's a foreign national. He's an England citizen. He's not an NRI. He's not an OCI. Can he purchase property individually but requires approval of whom? RBI, and those restrictions are there. What if he want to acquire property jointly with his wife? Who is the wife of Kelvin? Can they both acquire jointly? Yes. But there are conditions. Now what if that person don't have an intention to get married to her? Just because he want to purchase property in India, he got married. That is the scheme. To avoid this kind of transaction, there are a few conditions to be satisfied. What are the conditions to be satisfied? What is the first one? Array, what is the first one? What is the first one? Property is not a what? Are a farmhouse or plantation property. Second one, consideration is paid through what? Inward remittance to the normal banking channels. And most one, marriage must be registered and must have been subsisted for how many years, sir? 2 years. 2 years ಆಗಿರ್ಬೇಕು. Then only you can purchase it. Huh? Yeah, obviously. Preceding the acquisitions. I don't know what is the definition of continuous. Huh? Uh-huh. ಇಟ್ಟು ಬಿಟ್ಟು ಮತ್ತೆ ನನ್ಗೆ ಗೊತ್ತಿಲ್ಲ ಅಮ್ಮ. Like I don't know. Uh, I want to complete this chapter before the break, so let's focus on the topic. I hope you guys understood joint acquisition of property by a person resident where non-resident resident outside India along with a person resident in India. Next one, the fourth one is important based on which I expect them to ask questions in the examination. Acquisition of long-term visa holders. Acquisition by whom? Long-term visa holders. Who are these long-term visa holders? Who are these long-term visa holders? I gave these examples, right? Because of religious oppressions in the certain countries. For example, in Bangladesh, Pakistan, there is a special provisions. There was amendment in the Citizenship Act to give a citizenship status to the people who are from Pakistan because of religious oppression among the minorities. If you are an Hindu living in Pakistan or a Christian, you are a minority. And if you comes to India on a long-term visa, what visa? You're not a citizen of India, but you are a long-term visa holder. And if you want to purchase a property in India, can you purchase a property in India? Yes, subject to the what? Following condition. What condition? Let's see. What is the first condition? I want everyone to read with me. What is the first one? Applies to citizen of Afghanistan, Bangladesh, Pakistan. Belongs to the what community? Minority communities. That is Hindus, Sikhs, Jains, Buddhists, Parsis, Christians who are residing in India and granted a what? Long-term visa by the central government. Permitted acquisitions, one residential immovable property in India. For what purpose? Self-occupation. You can acquire one property for self-occupation, residential purpose. Second one immovable property in India for what purpose? Self-employment. One for residence, one for self-employment. Both are allowed. Next one, conditions. The property should not be located in a restricted or what areas? Protected areas. What areas? Are cantonment areas. In these areas, you should not purchase the properties. Which areas? Are cantonment areas. Second one, declaration to be submitted to whom? Revenue authority. What authority? Of the district, specifying the sources of funds, like out of what funds you are purchasing this property. Third one, registration document must mention the word, and also the fact that the person is on what visa? Long term visa. Next one, copies of the property documents must be submitted to whom? Deputy Commissioner of Police, Foreign Registration Office, Foreign Regional Registration Office, and Ministry of Foreign Affairs, Home Affairs. Last one, restrictions. Property is liable to attachment or confiscation if the person indulges in what? Anti-India activities. Second one, sale of such property is permitted only after acquiring what citizenship? Indian citizenship. There is a scope to ask practical question based on this topic. That is why I said it is important. Who are long-term visa holders? The one who has come from those specific country. What are those countries? The border, Afghanistan, Pakistan, Bangladesh, Sri Lanka is there. Okay. And can they purchase property in restricted areas? Can they sell it after acquiring what? Citizenship. Before that, can they sell it? No. Can they acquire how many properties they can acquire? One for business purpose, one for residential purpose. Clear? Next one, fifth one. Acquisition of immovable property by whom? Foreign embassies, diplomats, consulate and generals. Now, for example, we have embassy office in Chennai. US embassy is in Chennai, right? It is not in Bangalore. It's only in Chennai. They need properties, right? Can they acquire property? Yes. Allowed or not allowed? Allowed. Clearance from the government of India, Ministry of External Affairs, is obtained for such purchase or sale, and the consideration for acquisition of immovable property in India is paid out of the what? Funds remitted from the abroad through the normal banking channels. What channels? Normal banking channels. Sixth one. Acquisition of immovable property by a person resident outside India for carrying on what? Permitted activity. What activity? Like if you want to have a branch office, marketing office, to acquire a property for that, is it allowed or not allowed? Allowed. A branch or office or any other place of business in India established by a person resident outside India may acquire immovable property where? Where? In India. Acquisition is allowed only for what property? Immovable property. Necessary for what purpose? For activity carried on in India by such branch or office, the person must file a declaration in the form number what? IPI with which bank? Reserve Bank. Filing must be done within how many days? 90 days. The immovable property acquired may be mortgaged to whom? Authorized dealer. Means you can take money by mortgaging your property from the authorized dealer. Last one, acquisition by branch or office or other place of business or persons of the following nationals or origins requires whose approval? Whose approval? Who are they? Pakistan, Bangladesh, Sri Lanka, Afghanistan, China, Iran, and all these countries requires whose approval? RBI's approval. These are the provisions with respect to acquisition of property in India. Property where? By the persons who are what? Residents outside it. First one, what we discussed. What is the first category of acquisition? Who can acquire the first one? Foreign nationals, right? General conditions, foreign nationals, how they can acquire. Second one, acquisition of by whom? NRI and OCI. Next one, joint acquisition by the spouse of an NRIR and OCI. Next one, acquisition by long-term visa holders. Fifth one, embassies and consular offices. And the sixth one, acquisition of immovable property by a person resident where? For carrying the what? Permitted activity in India. Other than those particular nations cannot acquire. Next one, export of goods or services. Export of goods are, can you export goods? Yes or no? When you export the goods or services, will you receive foreign exchange? Are you supposed to repatriate within how many days? How many days? 7 days. How many days? Other than those normal cases, 90 days. How many days? Obligation of the exporters, they should furnish the declarations. They should also realize and repatriate foreign exchange to where in India. Manner of payment of export value. Payment must be made through what dealer? And what dealer? Authorized dealer. Export proceeds must be realized and repatriated to where? India. Where? Next one, project exports. What exports? Before entering into any such export arrangement, submit the proposal for a prior approval of whom? Approving authority. In case of guarantee is required. What is required? To be given prior to the post award approval, the same may be issued by an authorized dealer bank. What bank? Means if you have a project outside India, or constructing a building or a dam outside India, to export the goods for that purpose, you need approval of whom? RBI. And you should submit all the required documents. And we will discuss about export and import in detail under which topic? Foreign trade policy. What policy? Next one is authorized person. What person? Haven't discussed who is authorized person. Arey, sir, no. Now you guys tell me without looking at the book. Tell me who is an authorized person. Authorized dealer, money changer, offshore banking unit, and the last one. Next one, adjudication and appeal. Adjudication and what? These are procedural aspect. What aspect? Based on which they might ask questions in the examination. If they ask question, it is very easy to score. We have already covered all the difficult chapters, or difficult topics, not chapters. Done. Let's see. What is adjudication? Deciding a dispute. For example, let's say somebody has transferred foreign security other than through an authorized person, or somebody is having possession of foreign currency in crores. Can a person have possession of foreign currency in crores? How much is allowed? How much currency a person can possess? Person of resident of India, how much? 2000 US dollar. Person resident in India but not permanent resident in India, how much? Without any limit. If there is such kind of foreign exchange violations, what can be done? There will be an adjudication. There will be what? By the ED, Enforcement Directorate. Correct, right? Let's start. Appointment of whom? Who will appoint? Who will appoint? Who can appoint? You should specify the word jurisdiction. Every AA will have a specific jurisdiction. Okay? One area wise jurisdiction. Next one, authority can hold inquiries on complaints made in what? Writing. By whom? Officers authorized by the central government. So who does the inquiries? AA, adjudicating authority. Who appoints them? For what jurisdiction? Specific jurisdiction. Keep this much in your brain. The person alleged to have contravened the act must give a what opportunity? Reasonable opportunity of being heard. Principles of natural justice. Before you punish a person, you must give an opportunity of being heard. Next one, appeal to whom? Special directors. What directors? Against the order of AA, where you can go? Against the order of AA, where you can go for an appeal? Special directors. Who can appoint special directors? By notification made? Official gazette. Appeal can be made against the orders of assistant director as well as what director? Deputy director. So which director? Special director. Within how many days? How many days? Can the special director allow the appeal beyond 45 days? Yes, if there is a special reasons. What reason? Sufficient reason. Can government establish tribunals to hear the appeal? And which tribunal is considered as an appellate tribunal for the purpose of FEMA? Smugglers and Foreign Exchange Manipulators Act. That tribunal is considered as the appellate tribunal. Appeal to which tribunal? Appellate tribunal. Appeal should be prepared within how many days? From the receipt of order, tribunal may entertain the late appeal if there is a what cause? Sufficient cause. Tribunal may confirm, modify, or set aside the order after giving what? Parties an opportunity of being heard. Appeal should be disposed as expeditiously as possible, but within how many days maximum? 180 days. Can there be an appeal to High Court against the order of appellate tribunal? Within how many days? Only on the question of what? Law. Can there be relaxation for this time limit? Yes. For what reasons? Sufficient cause. Last topic, compounding of what? Contravention. What is compounding? That is mathematics. Here compounding means what? Compromise. Compoundable offenses, settlement. So, for example, I have done a foreign, like I am supposed to inform about receipt of foreign exchange to the RBI. I have not done the information. I have not filed the information with RBI. I have done the contravention of FEMA. Now RBI will initiate the prosecution. So, if I don't want that prosecution to happen, what I can do? I can admit my offense voluntarily, but I can ask the RBI to compound, saying that, sir, I admit my offense. You please tell me the penalty amount. I will pay. Don't go to court. Don't prosecute me. It is called as what? Compounding of offenses. Compounding of what? Where a person voluntarily admits the guilt and agrees to pay the penalty fixed by the compounding officer. That is called as what? Compounding of or offenses. What is compounding? Voluntary admission. What admission? Of the what? Contravention and seeking the what? Redress. Seeking the what? For contravention other than section number 3A. What is section number 3A? Regulation of what? Foreign exchange. Who is the compounding authority? Reserve Bank of Reserve Bank of what? For dealing with foreign exchange. And that is violation of section number 3. Who is the compounding authority? Director of Enforcement. Other than section number 3, it is RBI. Section number 3, Director of Enforcement. They are the one who compounds it. For example, if I have done the contravention of section number 3, who will compound the offense? Director of if I have the possession of foreign exchange beyond the limit, who will does the compounding? RBI. Section 3A, other than section number 3A, RBI. Up to 60 lakh, assistant manager. More than 60 lakh, up to 2.5 crores, DGM. More than 5 crores, sorry, up to 5 crores, general manager. More than 5 crores, chief general manager. They are the one who does the compounding of offenses. Compounding of what? Section 3A, who compounds it? Array, everyone has mouth, right? Open your mouth and answer. Director of Enforcement. Other than 3A, up to 60 lakh. More than 60, up to 2.5 crores, EGM. More than 5 crores, Chief General Manager. Up to 5 crores, General Manager. Next one, in case of T, up to 5 lakh, 5 lakh to 10 lakh, additional direct. 10 lakh to 50 lakh, more than 50 lakh and up to 1 crore, special director and deputy legal advisor. More than 1 crore, director of what? Enforcement and special director. How the application to be made? An application for compounding of offences to be made to whom? RBI. Made to whom? Either physically or via what? Parva website. What website? Parva website. Either physically or to this website. Either so motu or based on the what? Memorandum of contravention. Memorandum of what? They may ask in the examination what is compounding of offences, how the compounding is done. An application for compounding of offences should be made to whom? RBI, either online or what? Physically. Or what? Physically. What is the application fees? Plus how much GST? 18% GST. How do you pay that fees? Either by DD or by way of NEFT. Either way of what? NEFT. Next one, submission must include what? Contract details, not contract details, contact details of applicant, details of FDI, ECBs, ODI, branch, liaison office if applicable, copy of what? Memorandum of, if it is a company, or undertaking regarding ongoing inquiry, investigation or adjudication, if there is anything pending by the Department of Enforcement. All these details should be submitted to whom? RBI when you make an application for what? Compounding of offences. Can I submit the application online? Offline? Yes or no? What is the fees? Plus GST of how much? 18.5%. 18% or 18.5%? Procedure for compounding, how the compounding is done, who examines the application? Compounding authority may call for what documents? Additional document and the information. While determining the compounding amount, following factors will be considered. What is the first one? Undue gains are economic benefit from the contravention. Second one, loss cost to the authority. Third one, reputative nature of the contravention. Fourth one, conduct of the contravenor or any other relevant factors. Maximum compounding amount is up to how much? 3 times the sum involved in the contravention. That is the maximum amount of money they can fix. For example, let's say I have done a contravention of FEMA provision worth of 1 crore. How much compounding money they can fix? 3 crores. Maximum 3 crores. That's it. They can fix less than 1 crore also, but maximum how much? 3 crores. Clear? And this compounding application must be disposed within how many days? 182 days. 180 or 182 days. Last one, we have the functions of RBI. Do you want me to explain functions of RBI? What RBI does? Monetary authority, regulator and supervisor of what? Financial system, manager of foreign exchange, issue of currency, regulator and supervisor of payment system, and banker to the government and banks. And this is your FEMA, Foreign Exchange Management Act. Which act? Foreign Exchange Management Act. I want everyone to look at it. Listen, concentrate. Listen. What is the first topic we discussed? I am asking question, you guys should answer no. Listen, everyone. What is the first one? Second one? Third one? Person resident in? Fourth one? Fifth one? Sixth one? Regulation of what exchange? Seventh one? How many schedules? After that we discussed what? LRS. Next one? In that we discussed section number 6, subsection 4, 5, and one more, prohibited capital account transaction. After that, R, realization, repatriation of foreign exchange. Next one, remittance of assets. Next one, retention of foreign currency and coins. Then after that, acquisition of asset, immovable property where? In India by various categories of persons. After that, we discussed what? Exports and imports. Provision with respect to exports and imports. Then adjudication. Then compounding of offences. And the last one, RBI. Last one is what? This is your chapter number 1, FEMA, Foreign Exchange Management Act. What act? Foreign Exchange Management Act. We'll quickly go through the questions which might come in the examination or which were asked in the previous examination. Done? I want your cooperation now. I hope you guys are matured enough to concentrate and answer this question. This is for your own benefit. Let's start. Okay. Based on the topic number 1, foreign exchange and foreign security, there is one question asked in the which examination? 2010. So not so important, but you should remember what is foreign exchange and foreign security. Done. Next one, authorized person. What person? This question was asked in which examination? 2013 examination. And we know who is authorized person and who is an person. We can write answer about this also in the examination. Next one, based on person resident in India, there are no practical questions asked till now. But I've already included practical questions based on the ICI questions asked in the ICI so that we can solve the questions if they ask in the examinations. Are you guys clear with this? Do you know how to calculate or how to decide whether a person is resident in India or not now? Yes or no? How many days? More than 182 days. More than 182 days. Correct, right? So based on that, there is no questions in the examination. Next one, repatriate to India. Repatriate to where? Based on this also, there is no question asked till now, but there can be a question based on the concept called as modes of repatriation. Modes of what? Just discussed, right? In what modes you are supposed to repatriate? What is the first way? By selling it to authorized person. Second one, retaining in an account with whom? Authorized person. Last one, settlement of obligations in what currency? Foreign currency. They may ask question based on this topic, but there is no question till today. Next one, Regulation and management of what exchange? Foreign exchange. No questions were asked, but there is one question which you can solve it. The purpose of understanding the concepts. Next one, current account transaction. What transaction? In that we have various topics, definitions. No questions were asked, but if they ask, you will be you're already in a position to answer the question because you know what is current account transaction. What is current account transaction? Other than capital account transaction, payment in the ordinary course of business, travel, maintenance of close relatives, all those things, private visit abroad. Clear? Next one. Then prohibited capital account, current account transaction. What transaction? Prohibited current account transactions. We already discussed all those 8 transactions which are what? Prohibited. They may ask theory question or they may ask what question? Practical question. Let them ask whatever the question they want. We will answer those questions. Clear? Most important, they ask question based on this, which one? Schedule, current account transactions. We have this limit for other than individuals, right? Where permission is required. Prohibition, there is no questions asked, but approval of RBI is required, right? Approval of RBI, other than individuals, that 1% of commission, no, 1% of 3 years foreign exchange or 5 millions, whichever is less for donations. Second one, commission of how much? 25,000 US dollar, 5%, whichever is more. And for consultancy services, 10 million. 10 million for consultancy for infrastructure, other 1 million. And the last one, pre-incorporation expenses. This question was asked in the last exam. Based on this, they asked question in the previous examinations. Practical question. Done. So I have included the same thing in the form of questions. Next one, LRS. Liberalized remittance scheme. What is the limit? 2,50,000. Can it be clubbed? For current account transaction, yes. Capital account transaction, no. Based on this, there was a question. See, this is the question. This question was asked in 2024 examinations for 5 marks. December 2020. December 2024. This is which month? November. Can you guys answer this question, please, quickly? Justify following cases of resident individuals under the Foreign Exchange and Management Act 1999. Tushar Mehta wishes to remit a sum of US dollar 50,000 as a gift to his daughter in France. Can she do so? Can he do so? What transaction? Current or capital? Gift is a current account transaction. What transaction? Up to how much you can remit? 2,50,000. How much you are sending here? Allowed or not allowed? Allowed. Next one, Deepa. Read. Deepa. Age how many years? Wishes to go to where? For what visit? And obtain how much? Can she obtain 2,75,000? No. Only how much? 2,50,000. Akanksha. Going for what? Employment. Required sum of how much? For a settlement abroad. Can she draw 99,000? Yes. Sandeep Sharma. How much you want? Can you draw 3 lakh? Only how much? 2,50,000. Parent of General Manager Shishant Agarwal from Delhi is residing in Germany. He seeks your consultancy in sending a sum of 2,02,500 to his parents for their maintenance. Can he send? Maximum how much? 2,50,000 US dollar. Clear? Next one, capital account transaction. Based on definitions, they have not asked question yet, but I have included this question. Now tell me, first one, investment by person resident in India in foreign securities. Allowed or not allowed? Allowed or not allowed? Allowed. Foreign currency loans, export, import, and holding of currency or currency notes. Allowed or not allowed? Allowed. Investment in Nidhi company, trading in transferable development right. We discussed all these things, right? Next one. This question was asked in October 2022 examinations. Can you guys read this, please? Question. Let me see how many of you can answer this. Ruchika got an employment opportunity in where? UK, based IT company. She moved to UK and remained there for how many years? During her tenure, she purchased a small flat in UK. Can she purchase flat in UK? Does she need approval of RBI? Because where is she? UK. Why does she need approval of RBI to purchase property outside India? Can she deal with that property? Yes. After returning to India, she joined another IT company and let her flat. Can she do that? Can she give that flat on rent basis? Earn income? Because she acquired that property when she was outside India. Whether Ruchika can purchase the flats in UK and continue to retain even after returning to India? Yes. Can Ruchika purchase second flat? Yes. With the money which was earned when she was outside India. But what if she needs extra money from India? That requires approval of whom? Very good. Next one. This question was asked in RTPCA examination. Next we have classes of capital account transactions by person by resident in India. Uh, Prohibited transactions. Remember prohibited transactions? Prohibited capital account transactions. Can you answer? Yes or no? Then there is realization, repatriation, and surrender. Based on this, there was one question asked in the previous examinations. What is that one question? That is not based on this. There is no question asked till now based on what? Realization, repatriations, but they might ask in the examination. We should solve this question to be on a safer side. Next one, remittance of assets. Remittance of what? First one is for whom? Individuals. Other than NRIs and PIOs. Based on that, there is no question yet. Next one for NRIs and PIOs. No question, but I've included a question. It's supposed to solve it. Next one, possession, retention of what currency? Foreign currency. Based on this, they asked question in which examination? June 2024. Exam? June 2024. For how many marks? For how much? 4 marks. How much you can keep? Individuals, foreign currency notes, coins, authorized person resident in India but not permanent resident in India without any limit. Acquisition or transfer of immovable property where? In India. There is a question based on this. Next, acquisition of property in India by a person resident where? Outside India. Based on this, there is a question asked in June 2024 examination for 5 marks. What is the question? Read. Vinesh, a person resident outside India, wishes to acquire the immovable property in India for carrying on permitted activity. Explain whether Vinesh can do so under section number what? Of the Foreign Exchange and Management Act 1999. Remember, person resident outside India can acquire property where? In India. While he is resident in India. Or if he gets inherited from a person what? Resident in India. Discussed. Yes or no? Acquisition of by long-term visa holder. I expect them to ask questions based on this, so I have included a questions for this. Long-term visa holders, religious minorities. Export of goods. Based on this, there was a question. Atul Limited, an Indian company, intends to export its software of the value of how much? 15,000. Can they do so? Can they export software? Are there any conditions to be satisfied? Yes. Realization, repatriation, all those conditions. Correct now? Compounding of offences. Based on this, they asked question in the June 2022 examination, June 23 examination, and December 27 examinations. For how many marks? 4 marks, 4 marks, and 5 marks. Read the last question. Mr. Ronu, an Indian national, failed to realize and repatriate foreign exchange amounting to how much? Is she supposed to repatriate? She is supposed to repatriate within how many days? If she has not done, is it a violation of the act? Is there any possibility of her to compromise this offense? That is called as what? Compounding. She'll make an application to whom? RBI or ED? ED is only for what? Section number 3. Rest everything who comes up? RBI. How much fees you will pay? 10,000. Plus how much fees? 18%. How do you make application? Online or offline? Both. Within how many days you should dissolve this application? 180 days. How many days? Yes or no? These are the questions which might come in the examination based on the what? FEMA. Based on what? FEMA. Based on what? Now everyone close your notebooks fast. Quick answers, quick answers. I'll give a break of 5 minutes. Before that, quick answers. I purchased property outside India. What transaction? What transaction? I give a guarantee for a person resident outside India. What transaction? I'm staying in India for 183 days in the current year, but last year I was staying in India for only 50 days. Resident or non-resident? Not a resident of India. I have a branch outside India, controlled by me. I'm a resident India. Resident of? Resident of? Within how many days I should repatriate foreign exchange? How many days? How much foreign currency I can keep with me? Notes. 2000. Coins. Coins. Tell me, can I remit money earned by lottery? Allowed or prohibited? Can I pay dividend if dividend balancing is applicable? Allowed or prohibited? Do I need approval of RBI for going to abroad? To draw foreign exchange up to 1 lakh, beyond 2 lakh 50. Can I combine foreign exchange of family members for the purpose of purchasing flat outside India? Current account transaction. Can I remit money for maintenance of my relatives outside India? Can I remit the assets outside India? Can I remit my assets in India to outside India with approval, without approval? Up to how much? 1 million in a financial year. If it is acquired, if it is by way of retirement or by way of inheritance or by way of widowership, and the last one is foreign student. Can a person resident outside India invest in real estate sector, Riddhi company, chit fund, transferable development rights? Can Indians send money for callback services? Understood? This is your Foreign Exchange Management Act. No chapter is difficult if you study in a proper way with proper concentration. Simple as that. You guys were feeling it difficult. Not only you guys, everyone thinks this chapter is difficult. Trust me, this is the. You should always think in otherwise. If it is difficult for you, it should be easy for you guys. Yes or no? We're done with the first chapter. Yes or no? Any questions, any doubts in the first chapter? How much foreign currency you can retain? How much? Yes. Are banks considered as authorized dealers? Are they authorized person? Can I deal with foreign currency with other than authorized person? What is foreign exchange first? Foreign exchange means foreign currency and balances or credits which are payable in foreign currency and also includes what? Draft, traveler checks, bill of exchange, letter of credit expressed in Indian currency, payable in foreign currency. Again, drafts, traveler checks, bills of exchange, letter of credit drawn by the institutions, banks, or a person outside India but payable in India. At least remember this. If somebody come and ask what is foreign exchange, and if you don't write what is foreign exchange, what is the meaning of learning what is the entire chapter of what? Foreign exchange management. Then now last question. Tell me within how many days the RBI should compound the offences? How many days? 180. Done with this? Yes or no? After the break, we'll start with what? FDI, foreign direct investment. Lesson number 3, foreign direct investment. Madi. Guys, let's concentrate. Lesson number 3, overseas direct investment. What investment? ODI. What is ODI? Like how we have FDI for the foreign investors, for the Indian investors, what do we have? ODI. Simple chapter, few concepts. If you understand this chapter, you can be assured of 5 marks out of this chapter. Simple says simple chapter. Listen. First of all, what is ODI? Any acquisition of an unlisted equity capital. What capital? Or subscription as a part of memorandum of association of a foreign entity. It is called as what? ODI. Same like FDI. Same like what? FGI. When they invest in the capital of the Indian company, it is called as what? FGI. In the same way, when Indian entities or Indian person invest in the foreign entities, it is called as what? ODI. Acquisition of any unlisted equity capital or subscription as a part of what? Memorandum of association of what entity? Foreign entity. Second one, investment in what? 10% or more of the paid up equity capital of listed foreign entity. What entity? Is it called as ODI? Only if it is what? 10% or more of which entity? Listed entity. Unlisted, don't delete it, huh? Unlisted entity. What entity? Unlisted entity. Even if it is less than 10%, it is considered as what? FDI. Listed entity, 10% or more. 10% or what? More. Investment with a control where investment is less than 10% of paid up equity capital of which company? Listed foreign entity. Means even if you have invested less than 10%, but you have invested with control. With what? It is called as what? Overseas direct investment. Now you tell me what is overseas direct investment? Investment in the equity capital of what? Unlisted companies or subscription as a part of the memorandum of association. Second one, in 10% or more of what? Paid up equity capital of which company? Foreign, listed foreign entity. Even if it is less than 10% of the listed foreign entity, but if you invest with a control, it is called as what? ODI, overseas direct investment. Next one is what? OPI. What is OPI? What is OPI? Overseas portfolio investment. OPI refers to the investment in what securities? Foreign security, excluding what? ODI, unlisted debt instruments or securities issued by a person resident in India. If it is equity shares by an unlisted company, it is called as ODI. But if it is other securities by a foreign entity, it is called as what? OPI. Called as what? OPI. Less than 10% of listed companies, OPI. 10% or more, ODI. Subscription to memorandum of association, ODI. Irrespective of amount of contribution. Amount of what? Contribution. Next one. Restrictions on OPI. OPI cannot be made on what? Unlisted debt instrument. OPI cannot be made in securities issued by a person resident in India. Not in what? Not in an what? IFSC means you cannot make an OPI in an securities issued by whom? Residents in India. What in India? But however, if the security is issued by an IFSC company, what company? It is same like issued by a foreign entity because that IFSC is considered as what? Foreign territory. What territory? OPI cannot be made in derivatives. Cannot be made in what? Unless permitted by whom? RBI. OPI cannot be made in the commodities including the bullion depository receipts. Can you make OPI in the commodities? No. Next one, eligible Indian entities for ODI. Which entities in India can make ODI? First of all, what is ODI? One day international, overseas direct investment. Simple saying simple. You invest in the unlisted company or to their memorandum of association, listed company 10%, even if it is less than 10% with control. It is called as what? ODI. Other than that, it is called as what? OPI. Next one. What are the eligible Indian entities? I want everyone to repeat with me. Tell me what are the eligible Indian entities. What is the first one? Companies defined under the which act? Companies Act. Second one, body corporates. Third one, LLPs. Fourth one, partnership firm. Fifth one, resident individuals. Sixth one, registered trust and societies. All these persons can make investment where? Abroad. Under ODI. Who is the first one? Companies. Second one, body corporate. Third one, LLPs. Fourth one, partnership firm. Fifth one, resident individuals. Sixth one, registered trust and societies. Registered trust and what? Society. Manner of making the ODIs. In what manner you can make ODIs? Simple, say simple. You can subscribe to the what? Memorandum of association. Memorandum of, or you can acquire shares to the what? Bidding or tender. Bidding or what? Or acquire equity capital via right issue or allotment of what shares? Bonus shares. Capitalization of any amount due to the what entity? Conversion of loans. Correct, right? Next one, swap of security. Swap of what? Merger, demerger, amalgamation, or any scheme of arrangement. Same thing, whatever we discussed for Indian companies, also for which companies? Foreign companies. Correct, right? Can we subscribe to the memorandum of foreign companies? No. Who can subscribe? These people can subscribe. Understood? Second one, can they acquire to the bidding? Swap. What is swap? Share swap. I will swap my company shares with which company shares? Other company shares. Can there be an acquisition by way of mergers or amalgamation? Yes. Can there be an acquisition of equity capital by right issue or bonus share? Yes. These are the modes of what? Making the ODI. What is ODI? Overseas direct investment. This one is most important. ODI in financial service activity. What activities? An Indian entity engaged in what services? Financial services. What services? In India may make an ODI in a foreign entity. What entity? Which is directly or indirectly engaged in what services? Financial services activities. An Indian entity engaged in the financial services, for example, banks or NBFCs, they can also invest or they can also make an ODI in the foreign entity which are engaged in what? Financial services. Are there any conditions? Yes. What is the first condition? The Indian entity has posted a what? Net profit. What profit? In the preceding how many financial year? 3 financial year. अब loss में है, अब डूब रहा है. You cannot make a foreign investment. What investment? Foreign investment. आपके पास क्या होना चाहिए? Profit. ಕನ್ನಡ ನಿಮ್ಮ ಹತ್ರ ಏನಿರಬೇಕು? Profits ಇರಬೇಕು. ಏನಿರಬೇಕು? Profit. Second one, the Indian entity is registered with or regulated by what? Financial services regulators in India. Are you supposed to be registered? Yes. Aresa, no. The Indian entity has obtained what approval? Necessary approval from whom? Regulators, SEBI and RBI. Next one, the Indian entity not engaged in the financial services activity in India may make an ODI in what entity? Engaged in the financial services provided it has posted what profit? Even if you are not engaged in the financial services, still you can invest in a company which is engaged in the financial services provided you have posted a net profit in the preceding how many financial year? 3 financial year. An Indian entity not in the insurance sector may make an ODI in the general and health insurance sector if such insurance support its core overseas activity. What activity? Means that is their main business in overseas India. They can also make an ODI. Which company? Indian entity. Even though they're not in insurance sector, they can invest in the company which are engaged in insurance sector if it is their core business. What business? They may ask this question in the examination. What are the conditions to be satisfied for making investment in the financial service sector? What sector? Financial service sector. Next one, ODI by registered trust and society. Based on this, they asked question in the previous examination. What are the conditions to be satisfied for making ODI in a registered by a registered trust or a society? Trust or what? First of all, can a trust or a society make ODI? Yes, yes, yes. Are there any condition? Yes. What are the conditions? Any person, bolo. being a registered trust or a society engaged in educational sector. What sector? Or which has set up hospitals in India may make an ODI in the foreign entity with the prior approval of whom? Reserve Bank. Whose approval is required? RBI approval is required. For example, there is a some state trust, Siddhganga Trust, Education Trust. For example, BMS Education Trust, Jain Education Trust. Can they invest in the abroad? Can the trust invest abroad? Are there any conditions? Yes. The foreign entity is engaged in the what sector? Same sector. Now, Jain University. Can Jain Trust invest in the Harvard Trust? Because they are also into what sector? Education sector. Yes or no? The trust or the society should have been in existence for how many years? 3. Is Jain Trust is in existence for more than 3 years? Yes. Next one, the trust deed in the case of trust. Memorandum of association in case of society shall permit the what? Proposed ODI. Proposed what? Means their main document should permit the ODI. Next one, such investment has the approval of whom? Trustee. Means the one who manages the trust. And in case of society, council or managing or executive committee. What committee? Council or the executive or what committee? Management committee. Next one, in case of the trust or society required special license or permission either from the home Ministry of Home Affairs, central government, or from the relevant local authority as the case may be. These are the conditions subject to which a trust or a society can make FDI, not FDI, ODI. Where? Outside India. What is the first condition? Same sector. Second one, existence of 3 years. Third one, their document should permit it. Fourth one, approval is required. And the fifth one is what? If approval of concerned ministry is required, is supposed to obtain the approval of the concerned ministry. Yes or no? Next one is important, overseas investment. Because they already asked the question based on this. There are less chances of asking question based on this. They may ask. So, one more, the next option is what? This one. Overseas investment in what? IFSC by a person resident in India. If you invest in IFSC company, what company? Are the units in IFSC company? Is it called as ODI? If there is a financial institutions in the IFSC, will that financial institution is considered as foreign entity? Because that IFSC itself is what foreign territory. What territory? Foreign territory. Are there any conditions to be satisfied for ODI? Yes. What is the first condition? A person, bolo, resident in India, being an Indian entity or resident individual, may invest in units or any other instrument issued by what? Investment fund or a vehicle set up in what? IFSC as a OPI. What is OPI? Overseas Portfolio Investment. What investment? In the case of ODI made in the IFSC, approval by the concerned financial services regulator shall be decided within how many days? 45 days. Can you make investment in IFSC also? IFSC units are different, IFSC is different. What is IFSC? That IFSC itself. Give me an example of IFSC in India. Gift City. If you want to invest in the Gift City, you can do ODI. In the units of Gift City, OPI. Clear? Next one. An Indian entity. What entity? Not engaged in the financial service activity in India may make an ODI in a foreign entity engaged in what services? Financial service activities except in what sector? Banking and insurance sector. Even if it does not meet the what criteria? Net profit condition. But for other than that, you need to meet the what condition? Net profit. In the preceding how many financial year? 3 financial year. Next one. A resident individual may make ODI in a foreign entity in the IFSC, including one which is engaged in what services? Financial services, provided such entity does not have what? Subsidiary or step down subsidiary outside the what? IFSC where the individual has a control. Means if you are investing in a company which is in IFSC, you can do so even if you are not a what? Not into financial sector, provided that entity which is in the IFSC should not have a step-down subsidiary outside the IFSC in which I have a control. I am a company. I am into a manufacturing sector. I want to invest in a company which is in the IFSC center into financial sector. Can I do the investment? Yes, provided that IFSC unit should not have a step-down subsidiary outside the IFSC where I have a control. If I don't have a control, it is allowed. Clear? Next one. A recognized stock exchange in IFSC shall be treated as what? Stock exchange outside India. Give me an example for this. Gift Nifty. We have Gift Nifty, right? It is called as Gift Nifty because it is there where in the IFSC. Gift City of Gujarat. Yes or no? Next one. Limit of financial commitment. Important. What do you mean by financial commitment, sir? Financial commitment means total investment by a Indian resident. Total outflows. There is a limit on the total financial commitment. I expect them to ask question based on point number 8. Most important of this chapter. Concentrate. What is financial commitment? Financial commitment means by a person resident in India means aggregate amount of investment. Underline aggregate amount of investment by way of investment into the equity capital, debt other than overseas portfolio investment and non-fund based facility or facilities extended by it to all foreign entities. That is called as what? What commitment? Means the aggregate amount of investment by an investment into what capital? Equity capital and also debt capital. What is the amount of investment you have given as a commitment to the foreign entity is called as what? Financial commitment. Resident individuals are permitted to only to make an investment in equity capital of what entities? Overseas entities. Means resident individual. What individuals? You can only invest in the what? Equity capital. What capital? Not in the debt. Debt who can invest? Body corporates. What corporates? Body corporates. What is the limit? The financial commit shall not exceed how much? 400% of the net worth for the companies. As per the last audited balance sheet, it should not be more than how many months old? 18 months old in a financial year or 1 billion. How much? In a financial year, whichever is lower. If I am a company, I want to make investment in the foreign entities through ODI. What is the maximum financial commitment I can give? 400%. How much? Of my net worth or 1 billion US dollar in a financial year, whichever is lower. Any resident individual may make an ODI by way of investment in equity capital or OPI in the manner given in the which schedule? Schedule 3. Under which scheme? LRS scheme. Up to how much? 2,50,000. We discussed this, right? You can draw foreign exchange up to 2,50,000 even for what purpose? To make investment outside India. Is it a current account transaction, capital account transaction? When you invest in the shares of foreign company, you create an asset outside India, right? It's what we can use even the liberalized remittance scheme amount even for what transaction? Capital account transaction. Yes or no? Next one, restrictions and prohibitions important. Same like how an outside entity cannot invest in certain sectors. In the same way, the Indian entities cannot invest in certain sectors where outside India, where restrictions are restricted and prohibited sector. What is the first one? Read. No person resident in India shall make ODI in a foreign entity engaged in what? Real estate activities, gambling in any form. What form? Any form. Dealing with financial product linked to the Indian rupee without whose approval? Like derivatives, currency derivatives, all those things you cannot deal without whose approval? RBI's approval. Yes or no? But can you invest in equity shares? Can you invest in equity shares? But can you invest in real estate activities? Can you do gambling? Real estate activity does not include what? Development of what ships? Townships, commercial premises or residential premises, construction of roads, bridges for selling or leasing. Can you start? Can you do startup outside India under ODI? Allowed or not allowed? Allowed. Resident individuals can invest only out of what funds? They cannot borrow and invest. They can only invest out of what? Own funds. To do startup outside India. Next one, restrictions on what? Multiple layers. What layers? This you must be knowing. In Companies Act, we have a restrictions of layers of subsidiaries. Maximum how many layers is allowed? 2 layers. Subsidiaries, subsidiary. Subsidiary is what? Subsidiary. Should not go beyond how many layers? 2 layers. Next one, procedures for making what investment? ODI. Important. Procedure for making the what? ODI. If they ask easy question, they'll ask this topic. Listen everybody. First one. What is the first point? What is the first step for ODI? Filing form number what? FC. The person intending to make any financial commitment shall fill up the form number what? Array below form number what? FC. Duly supported by the requisite document and approach whom? Designated authorized dealer. What dealer? You go to the HDFC bank saying that HDFC, I want to make investment outside India. Lay low form number FC. I want to invest where? Outside India. If it is an approval route, what route? Regular what route? In respect of any case under the approval route, the applicant shall approach their designated AD who shall forward the proposal to whom? The AD will verify your document, send it to whom? RBI for what? Approval. The applications for overseas investment under the approval route would continue to be submitted to whom? Reserve Bank. What bank? In what form? Either in the physical form or in the what form? Electronic form. What form? Online reporting. The designated AD bank before forwarding the proposal shall submit the relevant sections of the form FC in the online form to whom? RBI. Document to be submitted. The following documents shall be submitted along with the what? Proposal. What is the first one? Background, details of transaction, reasons for seeking the approval, mentioning the extent FEMA provision, observations of the designated AD with respect to the proposed investment. Next one, recommendation of who? Recommendation of the AD bank with the confirmation that applicants board resolution or resolution form an equivalent body as applicable for the proposed transaction is in place. Diagrammatic representation of what? Organizational structure. You need to provide your structure of organization, board of directors, managers, MDs and all those things. Next one, valuation certificate. What certificate? For the foreign entity. Next one, proposal shall be submitted to whom? RBI. You put all these documents, submit the documents to the RBI, then RBI gives the what? Approval. Once you receive the approval, what that person is supposed to do? A person resident in India acquiring equity capital in the foreign entity shall submit evidence of investment. Evidence of what? Within how many months of investment? How many months? 6 months. Failing which the funds remitted overseas shall be repatriated within how many months? How many months? Either you make investment, submit the proof within how many months? 6 months. If not, what you will do? You should what? Repatriate within how many months? 6 months. The evidence of investment shall be retained. Shall be what? Retained. By whom? AD Bank. AD Bank, who shall monitor the receipt of required document. Form FC shall be submitted along with the requisite documents to the AD Bank for obtaining the what? Unique identification number on or before making the what? Initial ODI. We discussed this, right? You make an application to the ODI. ODI forms are not ODI. AD Bank. AD Bank forward the application to the RBI. You get the approval. You make the investment outside India. Give a report within 6 months. If not done, you repatriate back to India and sell it to the authorized person within how many months? 6 months. How many months? Any remittance towards foreign entity shall be facilitated by whom? AD Bank only. What bank only? AD Bank. Next one, approvals. What is the next one? Which transaction requires which sector approval? Application requiring approval from which government? Obviously, if you are making a commitment to the Pakistan, where are jurisdiction notified by whom? Central government. It requires whose approval? Investment in what sector? Strategic sector or specific geographies. It also requires whose approval? Central government approval. Sectors include energy and natural resources, submarine cable system, startups, any other sectors. These things requires whose approval? RBI, sorry, central government approval. What is the procedure? You submit document to ED bank, they will submit documents to whom? Central government. Next one, approval from whom? Approval from whom? Reserve Bank. Financial commitments by an Indian entity exceeding $, how much? 1 billion. 1 billion in a financial year shall require prior approval of whom? Reserve Bank. What bank? This one is most important. No objection certificate from the lender bank, regulatory body or investigating agency. Any person resident in India having an account appearing as a NPA, appearing as what? You have an account NPA in the bank and you want to make an ODI outside India. You need NOC from a bank as well. What if you are diverting your funds from India to outside India? So if you have any NPA, account, you need whose approval? That bank's NOC. Bank's what? NOC. Or you are classified as a what defaulter? Willful defaulter. For example, Vijay Mallya. What if this declaration happened before you have given the commitment? You have given commitment, then declaration happened. Then there is no NOC required. Only if you want to give a financial commitment after you are declared as willful defaulter, or if your asset is classified as NPA, in that situation, you need approval or NOC from whom? NOC from whom? Bank. Which bank? Lender bank. Are we clear with this? And the last topic of this chapter, restructuring. What is the last topic? Restructuring. Based on this, there can be question in the examinations. Listen, everybody. Concentrate. Important concept. A person resident in India, bolo, who has made an overseas direct investment in a foreign entity may allow the foreign entity to restructure its what sheet? Balance sheet. What do you mean by restructuring? They will change the value. Either they may write off your entire value of investment, or they may reduce it, or they may convert into equity shares or preferences. All these are called as what? Restructuring. Called as what? I have done investment in a foreign company and that foreign company want to do restructuring. Can I allow it? Yes, subject to the following condition. What is the first condition? The restructuring is allowed only if the reporting and documentation requirements are complied with. You need to report to the RBI plus you need to comply with what? Restructuring requirement. Third one, the diminution in the total value of outstanding dues towards the Indian investor after restructuring must not exceed the proportionate amount of what? Accumulated losses. Company accumulated losses. Because you accumulated losses, you want to reduce the value of the shares. Can you reduce below the loss amount? It is also called as reduction of share capital, right? Reduction of share capital is called as restructuring of balance sheet. Restructuring of what? See, if there is a loss, will my value of shares come down or will increase? Loss will reduce our value of shares, right? Yes or no? Now let's say the value of share is 10 rupees, but company has incurred a loss of 5 rupees. Now when company reduce my value of shares to 5 rupees, it is called as what? Restructuring. Can they reduce below 5 rupees? No. To the extent of how much? Loss. Extent of how much? Only after complying with what requirements? Reporting requirements. What requirements? If the original investment is more than how much? $, how many millions? 10 million. Or if the diminution exceeds 20% of the total outstanding dues, the diminution must be certified on a what basis? On an arm's length basis by a registered valuer. What valuer? He has to give a report saying that whether that revaluation or restructuring is in accordance with the law or not. Clear? So these are the condition to be satisfied. Condition to be for the purpose of what? Restructuring. For the purpose of what? Restructuring of any investment made by an Indian outside India. Simple say simple. With this chapter, we discussed what is ODI, what is OPI, who are eligible to invest, What are the instruments in which we can invest? Next one, investment by trust or societies, investment by IFSC, investment in IFSC units, and investment in financial sector, and financial commitment. What is the maximum financial commitment a person can give? 400% of what? Net worth, or 1 billion or million? Billion. Whichever is what? Lower. What is the maximum financial commitment you can give? Yes or no? Now, because it is a small chapter and because two topics, this less, there are minute topics which are not covered in this. Minute topics, one or two, like three topics. That is covered where in the question bank, in the question and answer format. What format? Question and answer. Now I want everyone to focus now. We're gonna read each and every point. साथ में पढ़ाई करेंगे. ठीक है? Let's start. First question. Concentrate. What do you mean by? Mean by what commitment? Under Indian party. What party? Under ODI. What do you mean by financial commitment? It means aggregate amount of investment made by whom? Person resident in India, foreign entity, under what regulation? ODI regulation, including what? Equity investment, debt investment, and non-fund based facilities. What facilities? All these are called as what commitment? Financial commitment. What commitment? What is the maximum financial commitment by a person, Indian entity? 400%. How much? Who is the Indian party? Company, body corporate, partnership firm, LLP, or any other entity. What entity? Any other entity. Next one. Define ODI. Define what? What is ODI? Read. Acquisition of unlisted equity capital or subscription as a part of memorandum of association of foreign entity, or investment in 10% more of paid up capital of listed foreign entity, or investment with a control where investment is less than what? 10% of the paid up equity capital of listed foreign entity. Next one. Procedure for making ODI. What for making ODI? Procedure. This question was asked in which year? For how many marks? 4 marks. In this, what is the first question? What are the obligations of person? What are the obligation of persons which has made direct investment outside India? Are you supposed to report it to the RBI within how many months? If not, are you supposed to repatriate within how many months? Within how many months? Are you supposed to obtain UIN number? What is UIN number? Unique identification number. We discussed all these things, right? There is one more question asked in 2022 examinations. What is the question? Read. An Indian company intends to make direct investment in joint venture outside India. Possible or not possible? How much maximum they can invest? 400%. How much? Or 1 billion in a financial year. Whichever is. Explain the procedures for making overseas investment by a person resident in India. I discussed what is the procedure. Filing the form number FC with the authorized dealer. Then you will submit it to whom? RBI, and obtain the UIN number. What number? UIN number. Yes or no? Next one. Manner of making the ODI. This question was asked in June 2024 exam. What exam? State the manner of making overseas direct investment by which entity? Indian entity. And what is the limit for financial commitment? Did I discuss the manner in which Indian entities can make a overseas investment? Yes or no? And what is the maximum financial commitment? Did I discuss that? What is the maximum financial commitment? 400%. Are we in a position to answer the previous year question? Next one. Next one. Discuss the terms and conditions for overseas direct investment by a proprietorship, concern, or unregistered partnership firm in what? India. This question we have not covered. Correct, right? If an unregistered firm, what firm? or a proprietary concern, if they want to make investment, are there any condition to be satisfied? Yes. The proprietorship concern or unregistered partnership from in India is classified as what holder? What holder? Remember status holder, 1 star, 2 star, 3 star, 4 star, 5 star. Next one. The partnership or proprietorship concern in India has a proven track record and the export outstanding does not exceed so much? 10%. The authorized dealer bank is satisfied that the proprietary concern or unregistered partnership firm is a what? KYC compliant. Means they have already complied with the KYC document. What documents? The reporting the proprietorship concern or unregistered partnership firm in India has not come under the what notice? Adverse notice. What notice? The overseas investment by sole proprietorship or unregistered partnership firm may be made by the proprietor concerned or the individual partners concerned within the limit available under what scheme? LRS scheme. What scheme? Now this question was asked in which examination? Based on this ODI by registered trust. What trust? What trust? Or by society. They asked questions many times. First, they asked in 2019. Second, they asked in 2011. Third, they asked in what? 2025. December 2025. For how many marks? 5 marks. How many marks? June 2024, I guess. कुछ भी 2024 or December 2024 or June 2025. अरे भाई होता है भाई. हाँ? Now this question is already there in your question paper. I think it came asked in last question paper. Previous. अरे होता है. Even I am a human being. I make mistakes. Correct, right? Conditions are clear. Can you answer if they ask question again? Next one. Overseas investment by whom? By person resident in India. Resident in what? Who can invest? Indian entities as well as resident individual. Approval by whom? Regulator. Financial services investment. You can invest even if you're not engaged in what activities? Financial service activities other than banking and insurance. Correct, right? ODI in what activities? Financial service activities. Did I discuss this one? Financial service activities. Only if you're engaged in what activities? Financial service activities. Correct, right? Provided if you have a what? Proven track record of profit. In the preceding how many years? 3 years. How many years? 3 years. Next one. Prohibited activities for ODI. Based on this, they ask question in which year? December 2023. Did I discuss the prohibited sectors? That real estate, gambling, then dealing with what product? Financial product linked with what? Indian rupee. What rupee? Based on this, they can ask question one more time in the examinations because this was asked in which examination? December 2023. Which examination? Next one. Eighth one. Restrictions on acquisition or transfer of what property? Immovable property. Where? Where? Outside India. If a person wants to transfer immovable property outside India, are there any restriction? Yes or no? This topic we have not covered, we'll cover here. A person resident in India may acquire immovable property outside India by way of what? Inheritance, gift, or purchase from a person resident in India who has acquired such property as per the what exchange? What exchange? I can acquire property outside India. Where? From a person who is in India, either by way of purchase or inheritance or by way of gift. Or by way of what? Gift. A person resident in India may acquire immovable property outside India from a person where? Resident? Resident where? Outside India. Either by way of what? Or by way of purchase out of foreign exchange held in the RFC account. What is RFC account? Resident foreign currency account. Or by of purchase of out of remittances sent into the what scheme? Liberalized remittance schemes as per the RBI, jointly with a relative who is a person resident where? Outside India, or out of the income or the sale proceeds of the assets other than ODI, acquired overseas under the provisions of the Act. These are the conditions complying which you can acquire the assets outside India. And this is your ODI. Chapter number 3. Chapter number what? Chapter number what? Now you already have an idea which topics are important based on chapter number 3. Chapter number what? 3. Yes or no? We'll take 5 minutes break. After the break, it is not. Listen, everybody. I want participation from each and every one of you. I will ask questions. You guys should tell me the answers now. Okay? Fast, guys. Let me see. Let me see how much you guys can retain. Let's see how much, like, whether we make this time, whatever the time we used in the class, whether we used it judicially or not, effectively. Okay? Listen. First chapter, FEMA. First chapter is what? First concept is what? Foreign exchange. Foreign exchange. What is foreign exchange? Foreign currency, balances, credits, bills. No, no, balances and credits which are expressed in what currency? Foreign currency. Second one, third one, drafts, traveler checks, bills of exchange, letter of credit, which is expressed in what currency? Indian currency. Payable in what currency? Foreign currency. Next one, drafts, traveler checks, bills of exchange, letter of credits drawn by the financial institutions, bank, or person resident outside India but payable in which currency? Indian currency. Question. A person is staying in India for person who has stayed for 182 days in the preceding financial year. Is he called as resident in India or resident outside India? He has stayed for 200 days in the last financial year and he is leaving India for employment purpose. Resident or non-resident? Not a resident of India, is a resident outside India. Resident outside India. Now you guys tell me, can a person exchange foreign currency other than through an authorized person? Allowed or not allowed? Not allowed. Only through which person? Authorized person. This authorized person includes currency, money exchanger. Yes or no? I won lottery and I want to remit that money outside India. Allowed or not allowed? Horse race, gambling, sweepstakes, to purchase lottery tickets, banned magazines. Allowed or not allowed? Can I pay commissions on the exports made towards the equity investment in a joint venture or wholly owned subsidiary? Allowed or not allowed? But can I pay dividend where dividend balancing is applicable? No. Can I pay commissions on the export made under the rupee special rupee credit route? What route? Special rupee state special rupee credit route. Is it allowed? No. Is there any exception? Yes. 10% of what? Tobacco and tea. Last one, callback services. Last one, any income arising out of what? Non-resident special rupee account. Prohibited transactions. Second one with the approval of government, and the last one with the approval of who? RBI. In that, especially for other than individual, other than what? Individuals. There are limits. What are the limits? Donation. Just remember this Upendra's movie. Upendra, Rakta Kanniru. Let's think Upendra comes to India. Upendra comes to what? India. He asks for donation. Ask for what? How much donation? 1% of donation from a person who is wearing 3 namas. Means 1% of 3 years. Or how many millions? 5 millions. Something I said, nonsense. 1% of 3 years. Preceding 3 financial years turnover, right? 3% of the what? Revenue. 1% of the preceding 3 years incomes or 5 millions, whichever is less. For this one, payment of commission for sale of flats, 25,000 US dollar or 5%, whichever is higher. For that lady with selling that flats, remember. Next one, Last one, third one. Huh? Consultancy services for infrastructure, it is 10 million. Other than infrastructure, 1 million. 1 million. For infra, 10 million. Other than infra, 1 million. Last one, reimbursement of these pre-incorporation expenses. What is the limit? 5% of the inward remittances are 1 lakh US dollar. Whichever is more. Whichever is, tell me, are capital account transactions permitted or prohibited? Permitted or prohibited? They are generally regulated unless it is permitted. Are there any prohibited capital account transactions for a person resident outside India? What is the first one? Chit fund. Second one, Niti, agriculture, real estate, then TDR, transferable development rights, and North Korea. What Korea? North Korea. Aresa, no. See, I just show the topics or the pages of the short notes. Everything will pop up in your mind. Listen, just just have a look. Just have a look. Foreign exchange, person resident in India, regulation and management of what exchange? Foreign exchange, current account transaction, prohibited what transaction? Current account transaction, lottery, horse race, purchase of lottery ticket, joint venture, dividend balancing, special rupee credit scheme, callback services, non-resident special rupee account. Schedule 3, which requires RBI approval. Yes or no? First one is for what? Facilities for individual. Going abroad, gift, employment, immigrations, close relatives, going abroad on a vacation or a business, medical expenses, and student studies abroad. Donation, second one, real estate, consultancy services, incorporation expenses. LRS scheme you have discussed. Yes or no? Capital account transaction, holding of asset by a Indian by a person resident in what? India. Section number 6 subsection 4. Section number 6 subsection 5. Yes or no? Prohibited transactions. What transaction? Prohibited transactions. Chit fund, Nidhi, agriculture, real estate, TDRS, and North Korea. Realization, repatriation, and surrender. Within how many days you're supposed to realize? 7 days. Otherwise, 90 days. Are you supposed to repatriate by selling to the authorized person? Yes. Surrender of foreign currency, remittance of assets. How many millions? How many million? 1 million. How many million? Aresa, no. For a person resident either by what? Retirement. Second one, widow. Third one, inheritance. Next one, foreign student. 4 transactions. How many million? 1 million. How many million? 1 million. Next one, remittance by NRIs and PIOs. Yes or no? All these things we have discussed. Retention of foreign currency. Retention of what currency? Foreign currency. Up to how much you can retain? 2000. 2000.